All right. All right. Do we have any earnings today? Let me see. Oh, snap. We got Walmart earnings this morning, man. I completely forgot about that. I didn't realize we had Walmart earnings. Oh, man. We forgot about Walmart earnings. Those are going to be dropping pretty early, too. That'll influence retail. Maybe that'll help the market. Let me know if you think Walmart earnings will help or hurt the market. I don't know. Yeah, we also have jobless claims at 8:30 Eastern Standard Time today. Let's see what we're looking like. What's up, chat? What's up, Beach, Varen, Johnny, Silverstone? All right, so Tesla's starting to bounce up a little bit. What's up, team? What's up, Alexis, Breeze, Sam? Let me go ahead and get some music. Hold on 1 second. Oh, man. You know what's weird is StreamYard must be having issues because I'm streaming on StreamYard right now and I can see 50 plus people are here. Yet when I look at StreamYard, it doesn't show anybody. I'm gonna refresh this. It might take the screen away for a second, guys. So hold on 1 second. Let me refresh the StreamYard. Something's going on with it. It's weird. I mean, I can still manage the stream, but it's just odd. Hold on. There we go. So okay, that's much better. The chat now showed up. I don't see anybody, but let me fix it. There we go. For whatever reason, it's not showing the live viewer count. Right now, it's 5:20 in the 5:28 in the morning. Yeah, I don't know about a bounce. I mean, I really don't know. We're green today on our stocks, but red overall on a lot of them. So, I mean, but we're just kind of sitting back waiting. Again, today we do have Walmart earnings, guys, today. So we do have Walmart earnings. Specifically, we got a Walmart, Billabee, nothing else really big, mostly just Walmart. That drops at 7:10, so that's dropping in about 40 minutes or so, a little bit over 40 minutes. Again, do me a favor, hit the like button if you haven't already. Yeah, we got jobless claims later on today, too. There we go, upload. All right, so we gotta. Well, AI saved the market, guys. Yeah, so again, with Nvidia earnings dropping soon. All right, guys. So what are other AI stocks? We got Intel, I guess. We got Chat GPT. Yeah, so we're doing it. And I don't know what's wrong with StreamYard. What's up, Alexis, Bree, Sam, Q? Wow, so early. Yeah, I don't know. Something's up with StreamYard today. As long as it works, it's all good. Um, Palantir, yeah, that's true. Again, SPY dipping down a little bit, but we are in a very obvious trend. And again, I don't know if we're going to stay in this trend or what's going to happen here, but we are in a pretty obvious trend. Again, we'll see if we actually hold or what, but you can see the SPY's in a pretty deep trend. See if the SPY continues in this trend. You can kind of see the trend here if we draw this trend out. It's a little bit more, it's a little bit less liquid, but like, here's the trend, I think, short term right now. I mean, that's what we've been in, at least. Again, I don't know if we're going to hold or what we're going to do, but that's the trend we're in. Let me drink some coffee. Maybe we bounce. Yeah, my comments are weird, dude. StreamYard's having issues, which is okay. As long as y'all can see me, we're good. Let me open up StreamYard somewhere else. And then maybe enter the studio here. And see if it works now. Yeah, I don't know what's going on with StreamYard or whatever it is, but StreamYard's giving me issues today. We still got a bunch of people here. We got 80 people here right now. I can see them, but like for whatever reason, StreamYard's struggling. Y'all can, as long as y'all can hear the music and everything. Yeah, hit the like people. Eurozone trade balance. I'm going to short this market into the previous low. Yeah, I think the most obvious bounce spot, if we look at the SPY, is about 430 on a daily chart. So if we look at a daily chart, I think the most obvious bounce level is actually right here. Technically, is this 430 level right there. I think that 430 level, if you extend it to the left, you can kind of see we run right into this open year resistance. We confirm that level a little bit down here as well. So it's like higher lows. If we're looking for the market to put in higher lows, ideally you want to see the market go like this, where here's a low, we want a higher low here, you know. So if we pull all the way back down there, you know, that's not a higher low, that's a break even low, which signifies choppiness. And so yeah, let's see, we'll see. All right, so I'm gonna have to figure out a different way to manage this, to be honest. So yeah, what's up, Juan? Nice, man. Yeah, so again, we got Walmart earnings dropping pretty soon. And again, we'll see if they help or hurt the market. You know, we are looking at this little mini trend here on the SPY to see if it holds or what we get from it. What is that, Arch? Any update about gold? I don't know what gold's doing. Again, do me a favor, hit the like button on the stream. We appreciate it. Cleveland raised CPI expectations. Does anybody know where yeah, we're looking at a couple things today. Again, what's the main thing you're watching this morning, team? Let me know. What's the NASDAQ doing? I look at the Q. The Q's testing the VWAP. We're still in kind of this upward trend. Like if we look at the NASDAQ here, I think you can kind of see the upward trend that we have. Again, market's consolidating a little bit back down. I can see a little bit of a trend here. These aren't like the best trends, so don't follow them too much, I would say. I'm just kind of glancing at trends. It's still pretty early. We do have Walmart earnings dropping in about 30 minutes. Looking for a 441 rejection to continue downward. I'm watching the US 30, so you're watching the NASDAQ. US 30 is the NASDAQ and the Dow. I always get those mixed up. It's the Dow. Can you please explain US 30? US 30 is the futures contract of the Dow. So yeah, it's just the futures contract of the Dow is what it is. All right, so we got a little bounce in the SPY and the NASDAQ. It's only a slight bounce. And again, we do have some earnings today. It's nothing big, in all honesty. Like, we don't really have any huge earnings this morning, but we have some. Yeah, the FOMC minute stream was fun, man. That was a busy stream, dude. That stream was just hectic. What's up, Sean? All right, what's up, Beach? Yeah, I hope you're doing good, Beach Bum. I see you doing cool things over there at Benzinga, man. So, congrats, dude. That's great, man. Happy for you. We're looking at Tesla here, dipping down to the VWAP here. Green on the day for Tesla, but red total for sure. But again, most of these are long-term portfolios. Seems like technicals are worthless these days. It is a data and feds market. Well, maybe. Yeah, so market's trying to bounce. Here's the Q. Q is still in that trend. Again, we do have jobless claims. We do have jobless claims. The Philly Fed manufacturing index today at 8:30. I don't think we have anything this evening in terms of earnings. I can look though, but I don't think we do. Let me see. Let's see earnings. I don't care about a freaking power report. Earnings whisper. There's a calendar. There we go. All right, so today, Walmart, of course, in about 30 minutes. We'll glance at Walmart, see if we find anything good. This evening, we've got like Bill.com, Ross, Applied Materials, a couple other ones. We got John Deere Friday morning, Xpeng Friday. Let me do a poll. Yeah, that's probably true. We're gonna do, does the market bounce back today? Yes or no? After big dips yesterday. Tesla at 223 is a buy, even if you dislike Tesla. Yeah, I mean, maybe. I don't know. Maybe it is. Yeah, I don't know. Technicals don't work by itself. You need to learn to read financial economic data and mix it with how indexes are moving, plus your technical analysis. Yeah, I mean, that's mostly what we do here, is precisely that. Again, a lot of people are emotional because, I mean, look, the SPY is pulled back. But again, like people, like what happens is contentment. You know, like people that are riding this up, you know, especially over the last 2 or 3 months, you know, they got really used to this right here, which was just huge gains in the market. You know, any pullbacks were very slight. You could basically buy any pullback and think that you're just going to live life and just get rich buying these pullbacks. And it's just not like that. The market's just not like that. It doesn't work like that. Generally, whenever we move up to extended like we have, like this, it's time for a pullback. And that's exactly what the market gave us. We gave us a really nice pullback of the last couple of days. The question now is like, are you buying into any of this stuff? I think there's a lot of arguments for a dip buy right now, but maybe not. Again, maybe the market dips and falls back. I think when you look at a daily or weekly chart, this is a healthy pullback. This is a necessary pullback. The market's not going to go up forever. And I think the higher it gets extended, especially when you look at like a parabolic curve, like it's getting steeper and steeper and steeper. You know, a parabolic curve, when you look at that, that generally signals extension and that we need to pull back a little bit. And prior to this run, I was telling people I thought we were extended. You know, I thought we were extended. I thought we needed a pretty large pullback, and that's exactly what we got. But do I think the market's going to crash? No, I don't think the market's going to crash. I think that's just emotion from people. I think if you get in the right stocks and you hold long enough, you'll be okay. But who knows, man? Maybe we keep dipping. I don't know. You guys know me. I'm never definitive. All right, so yeah, we got a little pullback in the Q. We got a little pullback in the SPY. Yeah, and I think what's going on a lot, interest rates are still very, very high. Mortgages, real estate, the commercial market is struggling. The actual market is struggling. I see some people bringing up the yield. And again, what happens, guys, is that like the commercial and real estate markets are struggling. The commercial real estate markets, the mortgage markets, they are struggling. You know, people in those industries are struggling. You know, and so what happens in that is there's a lot of effects of that, specifically with like commercial falling as much as it has is going to cause a lot of different things. Number one, commercial props up the market. So people who work and own businesses in commercial real estate are going to be losing money. Almost certainly, you know, they're going to be losing money. With that, you know, you're going to have people that branch off into other stuff, look at other stuff. Mortgage market as well. Like, it's really hard to, you know, the mortgage market is basically dependent on interest rates being low. You know, and so when interest rates are 2.25, everybody loves doing business. Everybody's making money and everything's all good and fine. When interest rates are not low, like right now, those businesses dry up. You know, those sales dry up, and that makes people emotional. You know, a lot of times people lash out and get weird, and you know, either way, that's important to watch. And yeah, we'll see what it all means. PayPal, I'm in PayPal. Although the plan is just to hold this one a little bit longer term, but I'll cut it if it starts to dip too much. Yeah, technicals work for sure. It depends on where you're looking at it though. Yeah, so interest rates are still pretty high. Yeah, so again, a lot of people are saying that because Target and TJ Maxx earnings looked strong, that the Fed might choose to raise rates more aggressively. That might signal more aggressive rate hikes. And the reason behind that is because there's a balancing act between like rate hikes, prices, and earnings. Higher earnings can be great and good, but like if inflation's bad, higher earnings can signal worse inflation. And that can drive the Fed to raise rates because raising rates is a combat tool for inflation, right? And so, you know, sometimes companies doing really well earnings can signal more rate hikes because of higher inflationary risks. Anyone who says technicals don't work honestly don't know what they're talking about. Yeah. Yeah, I mean, technicals work to a certain extent. I mean, here's a great example of this. If we look at my chart here, like if we just look at my chart here, right, and we extend this to the right, look at this trend. I mean, this trend's pretty obvious as well, I think. You know, we drew this earlier, you know, and again, you can kind of draw it out and see what I mean here. Like, look, so we are still in that trend. We bounced right at the bottom of that trend line, and that little hold there can signal where to. And we made a little bit of money. We're up about 100 and something. But yeah. So again, we're watching this. We also have Walmart earnings dropping in a couple minutes. Walmart earnings are set to drop in about 14 or 15 minutes. So Walmart will be interesting because that might influence everything else. Here's Walmart right now. Walmart at 161.50s. Walmart been pretty strong and actually been pretty resilient despite everything going on. Walmart's supposed to drop theirs at 7:10. So in 12 minutes. So yeah, in about 12 minutes, Walmart drops their numbers. We'll see what they show. Figure this out. All right, guys. So yeah, SPY is still consolidating here. Walmart earnings are going to signal some stuff. Hopefully they're good, man. Hopefully this saves the market. And we'll see if it does. PayPal's still dipping down. It might be something where I buy the dip if I want, but we're waiting for it here. This S&P's still moving up, still in that trend. Yeah, I'm watching everything else here too. All right, there's 6 a.m. So, you know, there's the opening bell scrum. Yeah, Walmart's dropping their numbers. Yeah, so Walmart dropping their numbers here. All right, guys. Tesla dipping down under 227s. Under 227s for Tesla. SPY bouncing right at that low here, guys. Look at Walmart rip. It looks like Walmart might be out with their earnings here, guys. Look at Walmart rip. This might drag the rest of the market back up. And it looks like it is to a certain extent. Something happened. Walmart just popped. This is most likely their earnings being released here. Maybe not. Big pop up to almost 165 for Walmart, but we just retraced back down. So maybe this isn't the earnings. Again, they're scheduled to drop theirs at 7:10. It is 7:01 market time. Okay, Walmart is out. I'm sorry. So Walmart just dropped earnings. They came in at 184 EPS versus 171 expected. Revenue of 161.6 billion versus 160.2 billion. So better than expected EPS and revenue here. Their revenue, they see second quarter sales beat expectations in revenue as well. Revenue growth of 5.7%, operating income growing faster at 6.7%. E-commerce is up 24%. GAAP, which is generally accepted accounting principles, EPS of 292. Adjusted EPS of 184 guides quarter three and raises the fiscal year 24 outlook. So better than expected EPS, sales, and guidance for Walmart here. And Walmart is popping up nicely. Look at this. So this is a big move for Walmart. And again, Walmart is ripping up nicely here. We'll put these numbers up on screen, but yeah, Walmart just beat, and they are up, testing highs of the day again. They beat on EPS and revenue as well. Yeah, Walmart here. We'll put the full list up. They did great. They did great. And they're looking good. Hopefully that helps the market a little bit here. You can see the full list of Walmart stuff right there. Walmart dipping down a little bit. Walmart's one of the better PE ratio stocks as well, though. What is GameStop earnings? Okay, it looks like StreamYard's finally working. They raised the full year. All right, good. StreamYard's finally freaking working, dude. Finally, man. StreamYard took a little while. They raised their full year forecast. Yeah, Walmart looks great, honestly. All right, look at Walmart helping the SPY a little bit. SPY back up to 440.7 here. Guys, 440.7. A big pop in the SPY from Walmart here. And again, we're still in this trend, guys. This is why we look at this trend here. We look at this trend, and you can kind of see we're holding this trend. We're holding this trend here. It looks really nice. And again, we'll see if we actually hold. But Walmart earnings are out. Again, but Walmart helping the market a little bit, dragging the market back up some. Again, Tesla bouncing up a little bit, but it is down short term too, though. Now we do have jobless claims numbers showing up today too. Jobless claims, Philly Fed index data, all very relevant, like important data here too. All right. Yeah, so again, SPY up to 441s almost. Walmart dropping down. Yeah, so Walmart is still pretty flat here. We got a little bounce up in the SPY, but Walmart is still down some. All right, so a little bop up here. We don't really have any other big earnings today. But yeah, jobless claims, Philly Fed index data. And then we do have jobless claims data. We'll put a poll up, or not a poll, we'll put a timer up here. We still got like an hour and what, 7 minutes. Market's popping. Look at this guy. So we got an hour and 20 minutes or so. All right, so there's the timer, but man, look at that bump right here into the SPY. SPY up to almost 441s again. Again, we got a little pump. Yeah, we're watching. Little dip here at 440s for the SPY of 441s or so. We got a pump today. We'll see, man. Philly Fed is dropped at 8:30 Eastern Standard Time. Yeah, Walmart had better than expected EPS sales and numbers as well. So yeah, Walmart had better than expected EPS revenue and numbers, which is good for them, of course, if they can hold that and continue to do that. But yeah, so Walmart is good. Again, if we look at Bloomberg, for instance, right? If we look at Bloomberg, or Market Watch, really. So today we are expecting for jobless claims 240,000. For jobless claims 240K. We could also look at the Philly Fed Index expecting -10 today, -10. And so again, it's a gauge on manufacturing. It measures the relative level of business conditions among manufacturers and the Fed. Above 0 on the index means improving conditions. Below indicates worsening conditions. And again, so this is all manufacturing data for August. Expectations are -10 for the Philly Fed Index, -10. So worsening manufacturing conditions here, according to the Philly Fed Index. Jobless claims are basically how many people are filing for unemployment. That is expected to show up at 240,000 here, guys, 240K. So, yeah, let me know what you guys think. Also, vote on the poll as well, guys. 52% of people say the market bounces back. 48% say the market does not bounce back. And again, we'll see. We also had some earnings drop this morning. Again, specifically Walmart. Most of the earnings that dropped today were bullish. Yeah, we're going to post this to Twitter. We always do a pretty good job of posting to Twitter. All right, guys. So, yeah, Walmart beat EPS, beat sales, had better than expected guidance, too. But it's not really reacting the best as you might think it would, you know. And we're going to post the earnings today, guys, like basically what everything entailed. And so again, if you want to get a view of what's going on for earnings today, here's a full breakdown of the earnings on our Twitter. Make sure to give your boy a follow and a like here on Twitter. So make sure to give us a follow and a like on your Twitter here. Also, Walmart guided better too. So Walmart put in fiscal year adjusted EPS guidance of 636 to 646 versus 628 estimates. So higher than expected EPS by a lot for fiscal year 24 guidance. They also see net sales at +4 to 4.5% versus a previous of +3.5%. Again, that's with better than expected revenue, better than expected EPS. Just doing well for Walmart here. You can see those numbers down there in the chat. No, for the fiscal year of 24, they had better guidance, which is that's even more important, I would say. Now, again, we got jobless claims data in the Philly Fed Index at 8:30. We'll see what those numbers show. So yeah, earnings dropped. See what else we get today, man. Again, Walmart bouncing back up a little bit after dipping down. It's surprising. It's one of those things, like, people think trading is easy, man, where you could just kind of wait for a company to report good earnings and then buy it. I wish it was that easy. I really do. It's not that easy, unfortunately. And typically you don't actually know how anything's going to react. I think sometimes, like, the big players here play with this to, get better entries. Like, I think they understand you're going to have emotion when earnings drop. And so a lot of the time, maybe they'll push the stock down and then get cheaper shares and then buy it back up and so forth. Tapestry drop numbers. Again, we did have Walmart. All right, so let's look at some of the other news today. Again, we got jobless claims at 8:30. Applied Materials, Ross, Walmart, Tapestry. Blue Shield of Cali is ripping up the playbook on pricing. Bond yields hit a 15-year high, adding pressure to borrowing. Yeah, so the yield on the 10-year Treasury note settled at about 4.258% yesterday. It's the highest close since June of 2008. It's making investors nervous because basically high yields means that money might leave the market and go to that. Past surges have proved that things that could have destabilized the market. 10 years well below the level of short-term rates set by the Fed. So a lot of people think that the yield for the 10-year bonds could keep growing. A lot of vacant lot. So yeah, there's a national housing shortage, but there's a lot of empty lots in Chicago, Detroit, Pittsburgh, and elsewhere beyond devs. Yeah, I'm looking at some other stuff. What's your opinion on rate hikes? Do we get more? I'm pretty sure we're going to skip or pause at the next one. I think we get more this year. I think we get at least one more cycle of rate hikes this year, but who knows for sure. Let me know what you guys think. Do you guys think we'll raise rates again this year? I'm sure we probably will. I mean, you never know for sure, but I'm sure we probably will. Again, vote on our poll as well, guys. We got our poll. We got 170 votes or so. 54% of people think, yes, the market bounces back today. And so far, we are bouncing back a little bit. The SPY at 481s roughly, or 441s, I mean. So the market is starting to try to climb back up. And again, we'll see if we actually hold these. Tesla's starting to really dump down, though, guys. So Tesla at 225s. We're green in some stuff today, but not super green. What's up, Al? Yeah, we'll see if the market gives us some good stuff. Look at the SPY rip. So SPY up to 441s right now, guys. Walmart over 162. That seems to be like a historical support or resistance level for Walmart, 162s. So, yeah, that's a good level right there. Yeah, I'm pretty sure we're going to at least raise rates one more time this year. You never know for sure, but One more rate hike, 25 basis points. I don't think it's going to be this next cycle, though. I don't think it's going to be in September. So, yeah, I don't think it's going to be in September. I don't think it's going to be this next cycle. I think it's going to be sometime after that. Again, SPY at 441s. Walmart right around that 162 level. Super green. Yeah. All right. So again, market's up. I'm not buying it right here. I think we're a little extended now. So I don't necessarily want to buy this, but I think we're up a lot. And maybe we hold. I don't know, man. All right, so again, Walmart over that level here. I think we could pull back a little bit, but again, I really don't know here. And right now, you can kind of see this choppy trend that's stopping me from markets. We still got about an hour before jobless data comes out, but you can kind of see this little choppy trend. Maybe we break past it and do something, but like I'm looking at that trend now. I don't know what I want to do here. All right, Walmart under 162. Got a little dip on the SPY. Let's watch the NASDAQ as well. And again, jobless claims data is relevant. All right, so we are up to basically 441. We've been consolidating around that spot for a minute now. Next CPI, I'm not sure when the next CPI report's going to be. I think it's going to be early next month. Let me see. September 13th. So September 13th is the next CPI report. And again, we'll see, man. Anything else that looks interesting in terms of stocks today, guys? Let me know if you can find anything. Tesla right at that previous closing price. So again, there's Walmart. Here's Tesla. So Tesla all the way down to that previous closing price. Try to bounce off of it right now. You can watch that 226 spot, that 226 level to see if we hold that. But watching Tesla around 226 here. Again, Tesla at 226.10s, 226.10s. All right, so again, the SPY at 441s. The Fed minutes yesterday was hawkish. Well, the market certainly reacted on the hawk side. I don't know if you'd call it hawkish, but the market definitely reacted negatively here. Again, here's when the FOMC minutes report came out. You can kind of see that right here for the Fed minutes report. It dropped right here, and the market originally did this. So again, the FOMC minutes report dropped. We dipped. We rebounded all the way back up to 443, and then we slammed down for the rest of the day here. So that's basically the price action since the FOMC minutes report, which is again dropped right there. Again, Walmart did release their numbers this morning. It's the slower part of the year. This is the slow part of the year where we, it's not as busy as typical, of course. What's up, Ricky? Yeah, I'm looking at some other stocks. If y'all have anything else that looks good, let me know. We're green on our stock trades today, green on our day trades as well, but I don't want to get too crazy. I just got to be safe and smart. Tesla's still consolidating right at that previous closing price. And again, we're trying to look at Walmart. I want to see if the SPY bounces in this trend still. We drew this trend earlier, and you can kind of see we're still in this trend. And this is why, a lot of traders want to trade reversals and do all this different stuff. You're typically going to have much better results just trading trends, guys. Trading trends. Are you bullish on the NASDAQ? Long term, sure. Short term, I have no idea what the NASDAQ's going to do. But when you zoom out long enough, I mean, it should go up long term, and it has. If we look at a futures contract like the NQ, and we put up a weekly chart, again, you can kind of see long term, the NASDAQ's going to go up long term. Generally, not always, of course, but generally, the NASDAQ's going to go up long term. In 2003, the NASDAQ was at 790s. Currently the NASDAQ is at about 15,000. And so you can do the same thing with the SPY, which is the S&P 500, and zoom out. And you can see the SPY specifically was at 44 bucks in 1993. Currently it's at about 500, 450, 440s, $500. And so, yeah, generally the markets are going to go up long term. Short term, I don't know. And I think the pullback that we've gotten in markets, if we put up a daily chart here, this pullback has lasted specifically 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 2 weeks, basically. This is a 2-week pullback. And so, again, the SPY has been pulling back for 2 weeks. The real question is, of course, do we continue to pull back, or is this just a healthy correctional bounce? Again, I don't know. So far, we're still green on the year on the SPY over the last 52 weeks. Again, my specific level that I'm watching to judge sentiment is 430s on the SPY. So 430s on the SPY. On the S&P 500, this specific level would be $4,300. So if we look at 4,300 on the S&P 500, that's the real level that I'm specifically watching here for the S&P 500. If we start to break under 4,300 on the S&P, that's a bad sign, I think. But I think as long as we hold over that, even if we pull back more, it's kind of normal flow of the market. I know bears are acting all doom and gloomy, and Michael Burry had that big short position or whatever it was, but yeah, Walmart raised guidance. Yeah, it was 3 trading weeks. Yeah, trading week is only 5 days, so almost 3 weeks. But again, the question is this a normal pullback, or is this the start of a bear market? What do you guys think? Is this a normal pullback, or is this a bear market, guys? And again, to zoom in a little bit here, you can kind of see it. This is the pullback we are facing now over the last couple weeks of market activity. When we zoom out, though, again, here's the trend of the market since October. That is the trend of the market since October. And so it could be arguable that we're in a really long-term trend here like this. And if that's the case, this little dip could be a pullback zone. But again, I don't know. I'm not saying that's what we're in. I'm just speculating here. We're guessing because that's all we can really do. So what do you guys think? Is this a start of a bear market, or is this just a normal correctional pullback? But yeah, so let me know. What do you guys think? Are we in a pullback? Let me do a poll here. Or not a poll. Yeah, let's do a poll. Healthy pullback, I guess. It's certainly arguable. Bear market for the next 12 to 18 months. Again, is this a normal correction pullback, or is this the start of a bear market, guys? Let me know what you guys think. Is this a normal pullback, team? If it were the start of a bear market, there'd be less warning. Not just a correction, just a pullback. Next bull rally coming in January. Maybe. If this was the start of a bear market, there'd be less warning. That's probably true. Tesla's starting to pop at the 225 level. But again, the SPY, this is a pretty extended pullback. But again, it's nothing we haven't seen. Like, for instance, the last pullbacks that looked like this, we had one back in December of last year. You can see in December of last year, we dipped all the way from like 40 on the or 400 on the SPY down to 380s or so. We got another one right here, which was even more profound, back from basically the 420 level on the SPY, everybody's favorite number, down to 38. So again, we've had pullbacks like this before, and the market's not going to go up forever. I know people get really content when the market's going like this, but it's not going to go up forever, and it's something that we should watch and pay attention to. So yeah, I'm on Thinkorswim right now. TOS, Thinkorswim, TOS. But yeah, the question right now is this a normal correction pullback, or is this the start of a bear market, guys? We got a couple green trades right now too. Again, let's see. Here's a weekly trend too, which I think a weekly trend is important to pay attention to as well. So like, here's a weekly chart. You know, like the people say in crash and bear market, I think a lot of them just want interest rates to go down. But I think you got to look at the real state of the market we're in. So we already had a crash-like move back, way back here in 2021. And so we've already had this big drop in the market. So it's not like, again, so right now the market looks more like a cup and handle, where it's like that potential. I think that's possible, and I think that's arguable for the market. But again, a lot of people think like, again, what it looks more like to me is that we're on the way out from a crash. You know, the crash kind of happened here. This was like a little mini crash. And by percentage wise, it is a little mini crash that happened in 2021. And so very rarely does the market crash in 2021 and then crash again a couple years later. That's very rare. And so it's more likely than not a cup-like momentum, in my opinion. But maybe I'm wrong here. Again, it's very possible I'm wrong too. The thing to consider is how much did the pandemic affect everything, because while, let's look at the historical market crashes, right? So let's go down the list and see what they look like. And maybe they look like this. I think the 2008 market. Okay, so yeah, 2008 didn't really look like this. So again, here's the 08 crash, right? Here's where mortgage markets fell. It started when this SPX was at about 1,500 on the S&P 500, and it fell all the way down to $650 or so, $650. That was a pretty brutal drop for the S&P 500, but again, it rebounded pretty quickly and went right back up. And again, it doesn't look like what we're in now. Here's the 2000 crash. So here's the 2000 crash. Oh man, I lost it. So again, here's the 2000 bubble. So basically the reason for this crash was because of internet stocks were bubbling. You know, like basically anything with .com on the end of it was getting huge valuations and public offerings and all this crazy stuff and IPOs. The whole market went crazy from this, and then eventually it corrected back down. And so you can see the S&P went from again about 1,500 all the way down to 700 or 800. The other crash prior to that was what, like Black Monday, which was right here, I think. You know, but this was a much smaller crash. So here's Black Monday. You know, at Black Monday, the S&P went from 336 down to 220. So a pretty brutal drop there as well. But again, we rebounded within a couple years. And the market was right back up. If we go all the way back to the OG crash, the 1929 stock market crash, as you can see, this was much more profound of a crash. Things were looking good on the S&P. They were looking great. Big drop. So this was a brutal crash. This was the OG crash, and you can see this one went. The S&P 500 was at about $31 at the time, about $31. It dropped all the way down to 4. All the way down to 4. You know, so yeah, the market dropped like 80%, 80, 90% in 28. So that is the history of crashes in the market, guys. And again, what we see right now is if it looks like anything, it most closely resembles 2008. Which again, if you look at 08 back here, if you look at 08, you kind of got a similar thing where you had the one line crash down here, and then you got the bounce back, and then you got another crash. The only difference is that, like, right now, it wasn't as big, and I think anything can happen here. Let me put the SPY up. Again, Tesla's still holding at that previous closing price. Let me know what you guys think. Good morning, John, and all. This does look like a normal pullback to me. Yeah, it could be a normal correction. I don't know, guys. I really don't know. You know what I mean? Again, we do have jobless claims. The Philly Fed Index dropping in a couple minutes. Again, Walmart numbers right there. All right, so jobless claims in the Philly Fed Manufacturing Index drop at 8:30 Eastern Standard Time. Again, so there's the jobless claims, the Philly Fed Index dropping at 8:30. Again, we're going to stream it as soon as it drops right here. And again, we'll see if they hold. The SPY's still in this little baby trend. We've been following the trend. Pulling back a little bit now, but I'm not actually confident enough to buy anything here in this trend. We'll see. I have a small position, Hannah, in Target. I ended up taking most of the profit off after the huge gap up on Target yesterday. And so I'm holding a small piece, but it's a longer term trade. And yesterday, again, I made about 600 or 700 on Target on the big gap up. Again, my average price is 128. And we took a large majority of it off at like the 133, 134, 135 level. So yeah, I mean, we're holding a smaller piece, much smaller, but we've already scaled out of most of that position. we got the bounce we wanted. I mean, target earnings did great. It gapped up to basically 140. So, yeah. U.S. economic data is much better than Euro and overseas in most metrics. I would say a pullback into another hike is soft landing or a mild recession. Maybe. Right. That's what I think as well. We're far from a crash market. We're at, the market was at highs and now it's kind of dipping down. It's hard because, like, a lot of people sensationalize the market. Like mortgage guys specifically are going to be desperate for the market to go down because that means mortgage rates go down with it and real estate kicks up a notch, but that's not what we really have. We have interest rates for real estate being really, really, really high. And in that regard, a lot of them are struggling, and that causes confirmation bias where they desperately want the market to fall. And so they're more likely to believe things that tell them they will. And so, again, we'll see what happens. Do you guys think mortgage rates will drop down under 5% this year? Do you think mortgage rates will drop under 6 or 5 or 6%? Let me know. I don't know. I got schooled last August, September when I was too bullish. I'm ready for some further bear action. Yeah, maybe. We'll see. Okay, we're still in this trend that we drew earlier in the S&P, though, and that's really the major trend that I'm watching. It looks like we're starting to trickle down, but we have confirmed the trend. We drew this thing earlier, and since we drew it, we've confirmed it a number of different times here. So, like, again, since we've drew this, you see confirmations in this bottom trend line level over and over and over again. And so we are confirming that trend. We are starting to get a little bounce in stocks as well. Again, the Tesla stock is up to 226.40 or so. And so we'll see if we actually hold these trends now. This year, August and September may be better than last year. Well, this year, August is definitely trending for a losing session this year for August. September typically is the worst month of the market. They call it the September slump because it's typically not good for markets. Again, called the September slump generally, and it's just not usually good for markets. But yeah, we'll see. We'll see what happens. I see mortgage rates rising even more in Canada. We had unexpectedly high CPI this month. Yeah, lift through the 1980s. This is just a bear bounce. Seen this too many times. Interest rates are not going down. Yeah. Depending on age, will depend if you paid these rates before. My first was 9.25%. My current is 2.4%, so I can never move now. Oh, yeah, you can definitely never refinance. You can move. You just got to keep that property as well. Keep that in. I'm definitely not getting a mortgage right now. We have not felt the pain yet. I have my teddy bear sitting next to me, eh? Hey, what's up, Shepard? Yeah, Tesla bouncing back up a little bit here. So again, you see Tesla market's still in that trend, and so we're still watching the trend. We're still keeping an eye on it. Tesla popping up. Let's see if it holds this. It's approaching the volume weighted average price. You can see that's right around 227. It's at 226.50s right now. We do have the SPY right around 441s. That seems to be a resistance level over the last couple minutes that we could probably pay attention to as well. SPY up 441s. Again, jobless claims in the Philly Fed Index drops in about 41 minutes. Will Walmart do good today? Walmart dropped better than expected results. It dropped good EPS, good revenue, and good fiscal year guidance, which are the big three that you want to do well in for earnings. And it did well in those earnings, man. It did better than expected EPS, better than expected revenue, better than expected fiscal year guidance. And so the only question for Walmart, like for me right now, I might buy it up, to be honest, soon. I'm going to look up the PE ratio to see what that's looking like, but I might buy up Walmart soon. Again, next week's a pretty big week for stuff too. Again, the PE ratio on Walmart's about 38, and so it's not like incredibly low. Although I don't know if that takes into account the current earnings. Let me see. So I can calculate these earnings really quick to see what they did. So again, they showed 184 EPS for Walmart. Again, 184 EPS versus 169 expected. So let's go ahead and tally these up. And again, if you don't know how to look up the PE ratio, which is price to earnings, it's judging how cheap or valued something is. A PE ratio under like 40 is typically seen as decent. And again, the way you calculate it is you add up the last 4 quarters of EPS, or you find the yearly EPS. And so we do 184 plus 147 plus 171, and then plus 150. And then you take that number, which is 6.5, and you divide it by the price. So you do 160 divided by 6.5. And this gives you the PE ratio, which for Walmart right now, after this latest release, is about 24. And so that, again, justifies me to buy this thing up. I'm going to buy this up. Small shares. What's a good share of Walmart? Like what, 25 shares or so? So yeah, we're going to buy that up. All right, so we just got 25 shares of Walmart here. Again, low PE ratio. A trailing PE ratio of about 24 is good right now, especially in this current market. And I think Walmart's probably pulled back a little bit. Oh, no, man. Maybe this isn't the right time to buy Walmart, actually. Oh, well, it's 25 shares. I was hoping Walmart had pulled back a little bit more, but again, this is not a bad diversification trade. Like, I can diversify into Walmart. This is my longer term portfolio that I've been building here, so we'll buy it after the good earnings dip, especially with good fiscal year guidance. How do some companies have a negative PE ratio? Well, if the companies are losing money, they might. What do we have next week? Hey, John, if someone wanted to get an equity loan on their home, would that change the current interest rate on their home or be a separate loan? I'm not sure about an equity loan. I know if you refinance your house, you're going to go with whatever interest rate they currently have. So like for instance, if you have a much lower interest rate, I wouldn't refinance right now. I would wait for prices to fall before you refinance. Not unless you like really need the money. But again, I'm not a mortgage or real estate professional, not liable. If I'm wrong about any of this stuff, I don't know. I might be wrong. I don't know. Chat, y'all help her out if y'all know more than me there. But I just know interest rates are incredibly high right now, and it's something that you want to be very weary of. Alcoa, yeah, I don't trust Alcoa. I definitely do not want to change my 2.7% interest rate. Just need to pay off credit cards. Yeah, I mean, with credit cards, it's something where I don't know if you want to take out a loan to pay off those loans or whatever it is. Like, I don't know if that's something that you want to do. With credit card debt, as long as you're making your base monthly payment, taking out more debt to pay that debt might not be the best move. I mean, it's up to you. Again, I don't know. I'm one of those people, like, I don't have any credit card debt really. I might spend money on my credit cards, but I usually pay it off at the end of every month. And I understand, like, not everybody has that luxury, and so I'm very blessed in that regard. But I'm not saying I have perfect credit. Like, I've had messed up credit before too. I had really bad credit, and what I did was I sent dispute letters to my credit agencies. So like credit disappears off of your credit report, or debt disappears after 7 years, as long as it's not student loan debt. But like, there's a couple things you have to understand regarding credit. Number one is that if you pay it off and it's 5 or 6 years old, you're making a terrible mistake. If you're paying off collection debt specifically, if you're paying off collection debt and it's already 5 or 6 years old, you might as well just wait another year. It's going to completely disappear. If you pay that debt off, the 7-year cycle restarts. And so you pay it off, you got to wait 7 years for that to get removed from your credit report. And so number one is you should never, ever, ever admit to debt. Never admit to collections. Never answer the phone with collections unless it's very new and you want to just pay it off because it's new. Again, you never admit to the debt because that restarts the 7-year cycle. And most of the time, like, what I ended up doing, and this is like mostly just medical debt is what I had. So it was mostly like medical debt, and it was debt that I didn't even know I had, because maybe I moved, maybe my number was different, maybe my email was different. And so they would just send it to collections. And before I even knew about it, it would be a collection and I'd have to just sit on it. Well, by the time it gets to the collection agency, if you wait a couple years, by the time it gets to the collection agency, it's being bought and sold for pennies on the dollar. And they most of the time don't even have the real paperwork behind it. And so if you send them a dispute letter saying, yo, this is not my debt, please remove this from my credit report immediately, or I'll take legal action. This needs to be removed immediately. This is not my debt. This is a mistake. This is not my debt. Remove it now. A lot of the time they'll do it. And that helped my credit a lot, because I had like a couple medical collections debt that they just completely removed a few years later. And that'll bump your credit score up. But, yeah, it's pointless to pay collections debt because it just restarts the cycle. And regardless of whether you pay it or not, it's not going to get removed. It's going to stay on your report for 7 years or less if they remove it early. A lot of people don't understand that. Like, a lot of people, again, the biggest thing is like, you just never admit you're you. You know, like the collection agencies will call you and they're desperate for it. And they'll say, "Is this John?" And you just say no. Or I just don't answer it. Any collections agency, I just don't answer it. But again, the only collections I really have are medical, like stuff that I didn't know about. I ain't even me, bro. Yeah. Yeah, again, Tesla moving up a little bit. Target moving up too. We're green on those today as well. Again, Walmart, we bought the little baby dip. We'll see what it does. Just a little small share size though. We'll see if we start to get that bounce that we want in the market. Again, we still got 30 minutes until this number, until all this stuff comes out. 30 minutes, guys, until jobless claims, the Philly Fed Index, all that stuff drops in 5 minutes, or in 30 minutes, I mean. So again, subscribe if you haven't yet. Hit the notification bell. We appreciate it. Extremely bullish today. Yeah, we'll see. Yeah, disputing certainly works. You just say, hey, this isn't my debt. Remove that stuff now. After like collections being in there for 2 or 3 years, they don't have any of the paperwork. Like they're just hoping you're dumb enough to pay it. You know, they're hoping they're dumb enough that you're dumb enough to not know about credit and just kind of pay collections if they call you. You know what I mean? Like you should just never pay. In my opinion, personal, subjective. Don't copy me. In my opinion, you never pay collections. It doesn't matter if, like, unless it's very new. The only way you pay collections is unless it's very new. So if it's like a week old, you could pay it, and sometimes they'll remove it, and it'll never go to collections. Is it buy or sell for gold? So gold right now did get a little run yesterday too, or a little run this morning. I mean, it dipped a lot yesterday, but it had a little run. Again, the SPY up to basically 441s. Tesla at 226.60s. Yeah, jobless data will be interesting. It'll be relevant. We'll see how much of an influence jobless data and the Philly Fed Index come out and what happens there. All right, so again, SPY still ripping up. SPY just broke over 441s. We can look at the Q. Gold is up a little bit today. It's kind of rebounding from some of the drops we had yesterday from the FOMC minutes report. The Q still moving up, almost to 364s. Bouncing back a little bit from yesterday's red day. How much money would actually change your life? I don't want to come across as braggy. How much money would actually change y'all's life? I mean, it depends on what you mean by change, you know. Higher energy should fuel metals higher. Hey, good luck, Beach Bum. Thanks, man. Y'all go check out Beach Bum's channel. Great content. Great swing trading content. Go check the man out. Great stuff. Hey, what's up, Manny? What do you think of that new Kava stock? I don't think that's new, is it? It's been around for a while, hasn't it? It had that crazy run on earnings and then dipped. Maybe it is new. Sorry. So this thing IPO'd last month or the month before last. So yeah, maybe it is new. All right, so the average starting salary for workers who graduate college is $55,260. That is $3,408 a month after taxes. The average rent is $1,700 a month. That means the average college grad is spending 50% of their income on rent, which is out there. All right, so we're pulling back to the bottom of this trend line, guys. So again, here's the SPY right now. We are pulling back to the bottom of the trend line. And again, when you get a good edge of support or resistance, like, look, we drew this line right here. Look at the 441 level. Like, we drew that resistance level, and look at exactly how this thing acted right there. So again, we drew this, and then look at what we rejected off of. We rejected off of 441, exactly where we drew that line. And so, yeah, with that, it's trying to hold. We'll see if we're pulling back to the bottom of the trend line, though. And so do we hold this trend now, guys? 441 seems to be a major resistance or support level. We'll see if we hold over it or under it. Yeah, so the X phone. Yeah, so Top Step took the last 2 weeks, fixed up everything, and now they're running great right now. The country got downgraded. Banks got downgraded. Yeah. Higher energy fuel metals tire, $30K. $10 make you high. Money is not the key to happiness. Yeah, I don't know. 55K college salary. I mean, people underestimate. I think, like, with the whole modern 6 figures is necessary, like, world we live in, I think a lot of people don't understand, like, 50, 60K a year is a good income. Like, again, if you've got $2,000 or $3,000 extra a month to spend outside of housing, then you're doing okay, you know. And again, the standard of living here in the U.S. is very high, regardless of what people say. The standard of living here is very high relative to the rest of the world. All right, so the SPY dipping down a little bit under that 440.80 level. So again, we might be breaking that bottom trend line here. So we might be breaking that bottom trend line. We're at 441 right now. So if the job report comes low, that's good or bad for... What is TLT, man? Yeah, I don't really watch TLT. The 20-year Treasury bond ETF. Yeah, I mean, it's been dipping last couple days. So I'm not sure the correlation there with TLT. How many bears or bulls here? Yeah, we can look at the polling numbers. We asked people, does the market bounce back today? 56% say yes, 44% say no. But after taxes and you make 55K is crap. Yeah. What is taxes? 13%. So 55 times 0.13 is about 715. And that means you're going to bring home about $47,000, $48,000 after tax. I mean, that's still a good amount. So that means you're going to be bringing in about 4K a month. It's not bad. I mean, it's not good, really. I mean, it's not bad. I don't know. All right. So again, Tesla consolidating right over that previous closing price. Walmart still trying to hold here too. Again, Walmart's still trying to hold. We bought a little bit this morning. We'll see if it holds. Tesla trying to hold as well. Again, the SPY broke down under that trend. I might short a little bit here too. We do have this data coming out today though, so y'all be ready and be careful. I mean, I don't know what the tax rate is for corporate. I know what my tax rate is, which is very high. You don't love to see my tax rate. I hate it. I have to pay tens of thousands of dollars a year in taxes. I hate it. But so I don't actually know what corporate tax rate. What's corporate tax rate? I thought it was like 13%. If you don't have to pay the self-employment tax, which is another like 13 or 14. Yeah, I kind of regretted buying Walmart after being close to the all-time high. Although maybe we'll get some like momentum there from it. Where's Bitcoin at? Bitcoin's still sitting at 28,500. And the SPY basically bounced right back up. We tried to short it a little bit, so we're down a little bit on this latest trade. Okay, there we go. We're green now on that trade, on this little pullback on the SPY. Oh, well, it just kind of faked out, pulled back. Yeah, so maybe my trend was off here. I don't know. I guess you could widen this trend a little bit too. I guess that would work as well. I thought we might get a trend break, but it doesn't look like it currently. Well, yeah, but a contribution to a 401k shouldn't be held against your salary. I mean, that's money. Like, it's kind of like saying, hey, if I save this money, if I take $3,000 a month and put it to the side, 55K isn't anything, And it's like, well, yeah, but you're taking that money and you're saving it. So that's an optional thing as well, of course. Yeah, consumption is good, but like I also don't believe in living. I don't believe in like, as an example, like I don't believe you should live your whole life really frugally
and then live good when you're 60 or 70 years old. I'd like to live good now. And so I think there's a balance there. I don't think, you hear a lot of people talk about like, yeah, guys, if you save, $1,000 a month, you'll have X amount by the time you're 65. It's like, bro, I want to live good before I'm 65. When I'm 65, I'm at the end, I can't think of a better word to put it, but when you're 65, your time's kind of getting up there. And so with that, I want to live good when I'm young. And I think in order to live good when you're young, you got to take risks. You save a little bit too. All right, guys, we got about 20 minutes. All right, we actually are up in our short right now on the S&P 500. We'll see if it actually holds this range now. But we are shorting a little bit, and we're green now on this too, so that's nice to see. Yeah, right, exactly, Quantum. Yeah, I'd like to live good now, not when I'm 65. All right, guys. Again, market's testing the bottom of this trend line. A big support or resistance level is 441, I think. I think 441 is relevant to watch. So BGZ, hit the live button next to the play button. It should catch you up to the stream if you're behind. So hit the live button next to the play button. It should catch you back up, man. You can live good and be a minimalist. Yeah, you kind of can, but like with that, you got to say, oh, well, you got to be happy not having anything. And I think in order to have experiences, you have to spend money for the most part, like to a certain extent, not always, but like I think you want to make sure you get experiences, and you don't want to just stay home, never do anything, not go anywhere, never spend money, and just save for when you're 65 plus. That's not going to be it. Who knows we don't know how long any of us have. And so again, one of the things I majorly disagree about is savings. Like you hear people say, oh, well, guys, if you save X amount right now, you'll have $1 million when you're 65. The problem. Man, my dog's need to shut up. Sorry, my dogs are freaking out, apparently. But yeah, the problem about that logic is like, oh, save X amount now, you'll have X amount when you're 65. Is the problem is like, say you save up and you have $1 million when you're 65. In 30 years, $1 million is going to be much less money. Bro, what is my dog barking at? But my point is that at 65, in 30 years, $1 million is going to be noticeably less money. It's going to be worth noticeably less. The buying power that $1 million gets you is going to be so much less that you're going to be break even. So like you hear all these things that are like, yeah, guys, if you invest $100K now, in 30 years, you'll have $1 million. And it's like, sure. But in 30 years, $100K will be worth similar to $1 million. And so you're going to break even. And so, yeah, you can save money. But again, if you want to live good, you got to take risks. What risks you take are ultimately up to you, of course. We got out of our short. We lost a little bit on the rest. We're still up over 100. But if you want to live good, you got to take risks when you're young. Or when you're old. You can take risks whenever you want, but... Yeah, man. Yeah, everybody's different, so it's all good, man. All right, so again, market's moving back up. Again, confirming that trend again, and we've been confirming this trend for a couple times now. I thought we might break it, but I think this trend might be just a longer-term trend. Let's watch the 441 level on the SPY. 441 seems like a very relevant and important level on the SPY, so let's watch that. Hey, nice BGs. No one knows what $1 million will be worth in 30 years. No, that's true, but we got a pretty good idea. You know what we do know for sure, and without question, what we do know is that $1 million in 30 years is going to be noticeably less buying power than $1 million today. You know, $1 million today is like a status symbol. $1 million in a couple years or in 30 years is probably going to be the equivalent of, you know, I don't know. We'll have to look at the compounding effects of things, but my point is, in 30 years, $1 million is going to be noticeably less buying power. And so, you know, you might say, oh, well, when you're in 30 years, you'll have $5 million, and like that's great, but $5 million sounds like a lot of money today, but in 30 years, it might not be. And that's the thing that people really need to understand about savings and all that stuff. Is that ideally, like, even if you invested, you're keeping up with inflation, and so you're kind of breaking even long term, and you don't realize it. But yeah. YouTube's not usually 11 to 12 seconds behind quantum. Usually we're much less than that. We might be like 2-3 seconds behind tops. Somebody told me a hint. If you want to make sure you're fully caught up, put it in fast forward mode. Increase the speed of the stream, and like increase the playback speed to like higher, like 1.5 or 1.25, and it will automatically catch you up if you get delayed. If you're really delayed, it's probably latency on your end more so. So John, let's say you live now and save as much. How are you gonna live when you're 60 comfortably? I'm not sure what you mean by that. It's all good. I'm just not sure what you mean by that. Might be the equivalent to a regular yearly salary. What, $1 million? Yeah, that's probably accurate. That's why, like, it's all inflationary hedges, guys. Like, again, the thing to really understand is that it's all not save as much. Okay, so you're saying if I don't save now, how am I going to live when I'm 60 plus? To be honest, I still got 25 years. Number one, I have enough right now to where I'm going to be okay. Number one, for me personally, right? But if we're just talking about the general person, number one is you got 25, 30 years to figure it out. And so, in that regard, like, I know people are nervous, but there's a couple ways you got to think. If you just want to make sure you're okay when you're 60 or 65, then save money, stick it in the S&P 500, or do whatever you got to do. If you want to live good now or live good in a couple of years, you got to take risks. You got to start businesses. You got to figure it out in that way. You know, and everybody's plan is different, and it's on you. I just don't think saving money specifically is the right move. I don't think putting money away is the right move. I think that causes people to lose so much money over time because of inflation that, you know, saving money is usually not a good move. Long term, I mean, like over like 10, 20 years. Like inflation in 10 or 20 years is going to be much higher in terms of how much things cost. The value of dollar is going to deflate over time. Again, we're right under that 441 level here, guys. So we are watching that 441 level. Yeah, balance is good. And it's true in everything in life. Yeah, I mean, if you want to live good, you got to take risks. Everybody does. I mean, if you want to really live good when you're young, you got to take risks. And that's okay. Taking risks is all right. The way to take risks, in my opinion, are take risks with money that you're okay with losing. You know, so like you save up 10K. you have enough to pay for your basic needs, and then you got an extra 10K. You can risk that. If you lose it, it's not the end of the world. Again, they do say it takes about 6 different tries in business to have a successful business, and I will attest to that. That is absolutely true. It takes many times of failing to actually have one that sticks. So it might be a couple tries of business before one sticks. And I think a lot of people try it once and then they give up, when on average it takes 5 or 6 tries in different businesses before you find one that's actually viable, that works long term. So if you try one and fail and then give up, you're just you don't understand the probabilities or the odds of businesses succeeding. All right, guys. Hey, we got 7 minutes here, 7 minutes. Again, let me know if jobless claims or numbers, if you think jobless claims are going to come in higher or lower than expected, higher or lower than expected for jobless claims. Again, expectations for those numbers today, guys. If we look at these, let me find it. Hold on. So again, the expectation for jobless claims are for, sorry team, bear with me. Hold on. Again, so the expectations for jobless claims are, let's pull this up and get this ready. I think they're 240,000 for jobless claims. They're expecting 240,000 for jobless claims. And again, this is how many people are filing for unemployment. The Philly Fed Index is a gauge on manufacturing. Again, below 0 indicates worsening conditions in manufacturing. Above 0 indicates better conditions and improving conditions in manufacturing. And the expectations for the Philly Fed Index are minus 10. Minus 10. OnlyFans and drugs are the best way to become a millionaire. I disagree. I don't think drugs are really a good way at all. I think most people lose. I don't understand it. Like, to be honest, I don't understand the people that want to look cool and act like they're dealers. Like, the reality of it is that's an incredibly difficult business to succeed in. Like, imagine working your butt off in business and saving up all this money. And then eventually, like, the odds are stacked against you. Eventually, you're going to get caught. And then what happens? They're going to take all your money and take all your stuff. And then what are you going to do? You're going to start over? Like, it's a terrible business. Like, again, the amount of people that actually succeed at it in terms of like net profits long term is infinitesimally low. But whatever reason, it's pushed to people like it's the coolest thing ever. Like, yeah, you're cool if you're a dealer. It's like, to be honest, it seems dumb to me. Like, I'm not going to work my butt off, save up all this money, and then have the risk of somebody just coming around and just taking all of it. Like, that doesn't sound like a good business to me. And especially with how good like tech has gotten, it just seems like a terrible business to me. All right, guys. Love you.
Love you.
All right, buddy. All right, guys. Sorry, I had to tell bye to my kids. My kids are going to school. Again, Walmart dipping down a little bit. We bought 25 shares, and so we bought a couple shares of Walmart. We might add a little bit to it right here. I guess there are earnings calls going on. That might be what's influencing it. But again, we have about 3 minutes before this data drops. About 3 minutes. Add a little bit there. Fix our average sum here. All right, guys. Again, we got 3 minutes. 3 minutes. Actually, we got about 4 minutes left. Sounds like a stock market. Yeah. I know. I mean, I know dealing's pushed to like kids and young people as being this really cool thing. And I think that's why most people do it, is because they want to look cool and get girls, right? But again, when you look at the odds of actually being successful at it, as well as the odds that you're going to get arrested and have everything taken from you, it just seems kind of like, it seems dumb. It seems dumb. But everybody wants to be cool. All right, so Walmart bounced back a little bit. We got that little ad down there, so we improved our average a little bit. Again, we got 3 minutes, guys, 3 minutes. Yeah, exactly, Abdul. The only ones that are really making money are the big pharma companies. That's it. Again, we'll see if the market gives us anything good. We still got a couple minutes left. Team, a couple minutes left. Walmart earnings calls going on right now, so I think, yeah, for sure, game, 100%, man. Yeah. Yeah, probably Corey. All right, guys, Tesla bounced it up again. Here goes these numbers here. We got 2 minutes, guys, 2 minutes. I've seen people complain online about Walmart doubling their great value plan. Or the prices, you mean? Yeah, I don't know. Again, we'll see if these numbers come in good, bad, red, green, higher, lower. Again, it depends on what the market is fearing. If the market is fearing inflation, you know, it might want higher jobless numbers, because higher jobless numbers means less people spending and ultimately lower potential prices. Again, it's all speculative, but again, the market might want higher jobless numbers, which means less people working. With the Philly Fed index, if inflation is still a big fear, it might want lesser numbers on the Philly index as well. Here, we're going to put the Q up. So yeah, if inflation is still that big fear, again, it really might be something where people want less manufacturing strength and more jobless claims numbers, higher jobless claims numbers. All right, guys. Yeah, we still got about 50 seconds. Make sure you hit the live button next to the play button as well, guys, to make sure you're fully caught up on stream. Again, make sure you hit the live button next to the play button to make sure you're like fully caught up on stream. Jobless claims expected at 240,000. Philly Fed index expected at -10. And we got about 30 seconds before this number drops. About 30 seconds. All right, guys, SPY right around 441. Look at the Q rip. So the Q's actually breaking highs, moving up. Is this NVIDIA? All right, 15 seconds, guys, 15 seconds. Again, 240,000 is what they're expecting. Here's the number release right here, guys. So here's the release. We'll see what we show. All right, there's the release right there. All right, there's the release. I don't see the jobless claims numbers out yet. All right, so jobless claims 239 versus 240,000. 239 versus 240, so slightly under expected for jobless claims number. Slightly under expected for jobless claims. Again, 239 versus 240. The Philly Fed index just came out. It's at 12. So manufacturing strength at 12 versus -10 for the Philly Fed index. Again, 12 versus -10 for the Philly Fed index. And so again, jobless claims came in lower than expected. The Philly Fed index came in higher than expected. Both of those signal economic strength. More growth economic GDP wise. Again, Philly Fed manufacturing index came in positive versus a -10 expected. So this shows that manufacturing has much more improving conditions in manufacturing than initially expected. And again, honestly, this is making the market move up. Again, the SPY up to 441 is at least trying to, the Q has been on a run prior to this. And again, jobless claims numbers came in lower than expected, which means that unemployment was a little bit lower here with less people filing for unemployment is what this means. Again, jobless claims came in at 239 versus 240 expected. Continuing claims came in at 1.716. So continuing claims actually came in a little bit higher than expected. And again, the Philly Fed index came in higher than expected as well, which signals much more improving manufacturing conditions than were ultimately expected here. And we'll put these numbers up on screen. Again, Philly Fed index higher than expected at 12 versus -10 expected. Jobless claims coming in lower than expected as well at 239 versus 240 expected. So we'll put both of these numbers up on screen. But again, both of these signal economic strength is essentially what this means. So there's the numbers right there. Again, both of these signal economic strength. Yeah, a lot of other stuff starting to kind of pop up with us here, specifically Disney. Again, we bought Disney on the dip a couple days ago. It's starting to bounce back, or maybe it was yesterday. But again, jobless claims numbers coming in lower than expected. The Philly Fed Index data showed a much stronger manufacturing sector than expected. Again, they expected -10, which below zero indicates manufacturing worsening conditions, right, in manufacturing. So -10 is what they were expecting. So they were expecting worsening conditions in manufacturing. Again, they ended up showing +12 versus -10. And again, you can see the Q rip it up at 364s. You can see the SPY rip it up at 441s. And so what this signals is that the market, at least to a certain extent, was fearing a recession. Is what this signals here. We're still battling that 441 level we talked about, but yeah, that's essentially what it meant, what this data means. Over 50 is good, under 50 is bad. Well, not for this, Gordon. This is different. This is not the same. This is not PMI data. This is not manufacturing PMI. This is the Philly Fed Index, which is a different index. It's not the same. So with manufacturing PMI above over 50 indicates higher manufacturing expansion. Below 50 indicates weaker manufacturing expansion. This is not the same thing. This is the Philly Fed Index. So in this regard, 0 indicates neutral. Above 0 indicates improving manufacturing conditions. Below 0 indicates worsening manufacturing conditions. And they expected worsening, and they ended up showing 12, which is improving conditions versus minus 10 expected here. So we're back to the bottom of this range though on the SPY. Market's starting to pull back slightly here. Yeah, all good. Just kind of helping you out, letting you know. Also, guys, we got a couple sponsors. We cover this data really, really fast. And so, again, one of the big things we do here is we cover this data quick. We don't charge for content. We don't sell a course. We don't sell a service. We don't claim to be experts. We don't act like gurus. We put everything out there for free. And again, if you haven't already, check out TopStep. TopStep recently opened up again for traders. And again, TopStep is the single easiest way to day trade if you want to learn without taking on too much risk. The base combine's $49. So you can enter this for $49. It's a challenge. So they test your skill in day trading. They give you a demo. The base one's $50K. It's $49. If you can hit $3K in profit without losing $2K and following the rest of their rules and conditions, they fund you between $50K to up to $150K with a 90% split, and you get to keep your first $10,000 in profit prior to the 90% split. And so really useful for traders because it genuinely gives them a great middle ground of pressure. You still have some pressure to succeed. It's not the full extent of putting up the money yourself, but if you lose, it's not the end of the world. And if you're good enough to pass it, you still get 90% and your first 10K in profit. And so it's the best of both worlds. Limited risk, much less than putting up the money yourself. And most day traders lose, regardless of whether they're on TopStep or not. And so it's much cheaper to lose on TopStep than it is to put the money up yourself. In futures, you can day trade the S&P 500, the NASDAQ, currencies, gold, silver. The patterns are very similar to stocks. But again, there's no red tape. There's no PDT rule. It's just a great way to learn. It's a great way to potentially get funded if you're good enough. And TopStep's been around for over a decade. They pay out millions in actual withdrawals every year. They fund thousands a year, and they're the most legit one in the world. They're the gold standard. Check them out. Great way to help support the channel. There's the link. They are a sponsor of mine. I'm certainly biased, of course, in their favor, but again, you can check them out. All right, so market just ripped over 441. We broke over that previous support level. Again, we've been in this trend all morning that we drew, and it's been holding that trend really well too. So somebody said we had other economic data drop today. What else do we have? Philly Fed Index. Oh, we have the leading U.S. index. That's a pretty small release. We got the Fed reserve balance. Look at the market fly here, guys. Wow. So look at the SPY. Look at Q. Just ripping up big here. Wow. Big increases in markets right now, guys. Wow, it's a big move. Tesla bouncing back. Everything else is kind of rebounding too here. Look at the Q rip. Look at the SPY rip, man. Wow. What a move here for these markets, guys. Look how big this movement is. All right, huge pop. Again, we're at 441.50, 441.50. The Q is at 364.50s for the Q. Q at 364.50s. So again, the NASDAQ, the S&P 500, both ripping up big on this economic data, guys. Both big increases, big movements here. Again, the Q up to 364s. Anything else moving here, guys? I mean, I see a lot of stuff going green on the day now with these improvements. Let's see if this signals a market rebound here. Yeah, I'm going to go ahead and end the poll right now. Does the market bounce today? Yes or no? I guess we can leave the poll. We got about 700 votes. Yeah, market's nicely green in pre-market. We got a little dip, though. And so the question is, do we actually hold this gain that we've made from this right now? Still got about 50 minutes until the market opens, guys. About 50 minutes. Big surge up. Popped over 441. I want to see if that level holds as like a support level. There's no minimum time frame. There's no maximum time frame. Person, you just can't lose over 2K. So it's a 2 to 3 ratio, which is pretty reasonable. All right, so again, remember, Jackson Hole is expected to start on August 24th, which is next Thursday. Guys, next Thursday, we're supposed to get Jackson Hole Economic Symposium. Generally, Powell speaks at this, and it's going to be a huge meet. Hopefully, he says some optimistic things, but this might signal, economy growth, weakness, like what all this means for everybody. And again, he's set to speak. All right, so market ripped up. It's now pulling back. So we're still kind of in that same trend here, to be honest. We'll see if the market rebounds back or what the market looks like now. But we're still kind of in that same trend. Keith, I think they pay you as an independent contractor, but you want to check with them regarding taxes or ask a CPA. Again, I have no idea, about what any of that stuff means or does or whatever it is, no idea, man. Ask your CPA accountant or ask Top Step themselves. No idea in that regard. I think they pay you as independent contractors, but again, I'm not sure. Again, if you want the link, link is in the description. Show. Yeah, if you want to check it out, again, link is in the description, guys. All right, so SPY's still dipping here. Yeah, market looking weak and then retracing all the way back up. We'll see if it actually holds down way down here like it is. Q finally pulling back some after a big upward movement here. Again, and the market has been on a pretty bearish couple day period now. All right, we're catching some nice gains here in this account right now. So yeah, we're about 280 or so. Grinding this up. The VWAP. Yeah, VWAP's at about 441, like right around that support level that I like here. That's been a level that I've been targeting. And we're still kind of following that trend that we drew. Watching 441 specifically, but you can kind of see we're still in that trend. The Q has not had a red candle 1, 2, 3, 4, 5, 6, 7, 8. Out of 8 5-minute candles, the Q has not had one red one out of 8 5-minute candles. Here's the SPY. SPY just ripped over that previous high level as well. Still trying to move. Yeah, I mean, KC, I mean, again, one thing that, like, it would be one thing if you ever interpret any economic data as positive, but it's almost always a negative interpretation, regardless of whether the numbers are, like, better or worse than expected or anything. You're always typically negative, and it just doesn't seem objective. No offense, you know. And so I think a surprise beat for manufacturing is obviously causing the market to push up short term when most of the market expected economic, weakness. I think less unemployment numbers and higher manufacturing strength, especially when they expected a number under 0, is pretty good. And the market is certainly reacting to the positive side. Again, I don't know if it's actually going to hold. But again, I guess my point is, like, it's fine to be bearish. But if it's always like universally bearish, it just seems very biased. I think you gotta, if the numbers are good, you gotta say they're good. If the numbers are bad, you gotta say they're bad. All right, E-mini trying to hold. We'll see. But again, the Q has not had one red candle in the last, again, 1, 2, 3, 4, 5, 6, 7, 7 minutes, or 7 candles. So in the last 35 minutes, the Q has not had one red candle. Yeah, I mean, if I'm being honest, KC or financial fighter, whatever you really want me to call you, again, what I respect is diversity of viewpoints. I understand why people might want to be bearish, and I understand being bearish. I really do. And again, prior to this big pullback, I told people I thought the market was extended on the upside. I thought the market was extended on the upside. I just think, like, if you're gonna be here for every economic release, it's fine to be bearish, but I think you got to look at the data and just look at the data. Like, I think having strength in manufacturing when the rest of the market expected weakness is a positive thing. And the market's obviously reacting to the upside. And so I think you just got to be objective about the data releases, man. Because what it genuinely seems like, and again, maybe I'm wrong, and I'm not really trying to argue or anything like that. I'm just kind of trying to put this out there so people at home understand, is that, if every data release, whether it's better than expected or worse than expected, is bearish, that's not objective. And again, what I try to genuinely do is just be objective about it. Like, if it's good, I think it's good. If it's bad, I think it's bad. And again, we can look at how the market reacts to it. And the market is a really nice sentiment judging thing to see what the market feels about it. My invite to Jackson Hole was lost in the mail, Finch. Hey, mine too, bro. Mine too, man. Again, E-mini looking strong right now. It's still pushing up. It's almost up to 441.50s. Yeah. Billionaire only cub. Yeah, Jackson Hole is really nice. Again, we're right at 441.50 here. And so we'll see if that level holds too. We still have this upward trend, and we've been in this longer term trend for a minute now. And I'm not sure what it's going to hold or what it's going to look like. We'll see. Yeah, I'm watching AMC as well here. Like, we bought some AMC shares also. We bought a little bit of Apple too, and Apple's actually green on the day as well. We're pretty flat on Apple though. Walmart bouncing back a little bit. Disney trade, we're actually doing okay on that one too. Tesla bouncing back some as well here. If we look at Tesla, the Q's still pretty flat right now, but look at Tesla. So Tesla bouncing back up, still green on the day. Bouncing, if you're not watching the previous closing price, you're missing out on a really relevant level here. So the previous closing price is the level at which stocks go from red to green to red. You can see why we watch it on Tesla, because like here's Tesla. Look at exactly where it pulls back to and bounces. And so this is a relevant level. It's a sentiment changing level. You know, when it breaks under this, other traders are really watching this previous closing price, because again, they're watching this level because it influences their sentiment. And so levels that are typically my favorite shorter term levels to watch are levels in which I think there's a lot of other traders watching them. Because if you really think about technicals in general, technicals are really just based off of what people see. And so with that in mind, you want to look at technical levels that the most other people are watching. And the previous closing price is a very highly watched level, not just by traders, but by algorithms as well. And so it's something that, like, a lot of the time you'll see pullbacks to it. You'll see holds. If we do break under it, you'll see like support turning into resistance turning into support, and vice versa. And it's just one of those levels that you want to condition yourself to pay attention to, because it really is something that does influence stocks, you know, a heavy amount. You know, if you look at Walmart, for instance, right? Walmart broke right under the previous close and then bounced back up and rejected off of it. So it broke under it, and then that level turned into resistance. And so the previous closing price is a good level. Yeah, it might be cheap right here. I don't know. I guess KC, man. And again, this is probably the last time I'm not gonna argue with you. You just seem upset that I even said something. What I see on my end, man, and again, you have to understand what I see. I see you creating other accounts, talking to yourself, confirming your bias. I see you being Financial Fight, and then you switching to KC, and then for a little while, you even talk to yourself on the Financial Fight KC names. And you could say you're not, and say you're not, and that's fine. At a certain point, it just seems like it's just like, we get it. You're pushing the bearish narrative, and that's fine. Like, again, I understand being bearish. I guess what I respect is diversity. You know, if every report comes out and every number comes out and you're constantly bearish about it, at a certain point, it's just going to be like, all right, we get it. You know, no matter what the report is, you're bearish. But again, I think diversity of outlook, like, I think being able to look at the numbers and say good or bad is important. And I think traders at home need to understand, like, you don't want to be too rigid in your views. You got to be able to switch back and forth and look at different numbers and then cause the reactions there. But again, it's all good. And again, maybe I'm wrong there. I don't know. What I will say is running a YouTube channel is weird. You know, Walmart back up over that previous closing price. So, like, with I just said, but again, it's not something I necessarily want to argue about. Love the channel. I'd subscribe to John, but I already do. You know, and maybe I'm just biased against bears, KC. Again, maybe that's true. I don't know. I guess at a certain point, it's like, dude, we see all this data come out. It's like constantly, again, bearish is fine. But I think, like, when the numbers come in better than expected and the market pushes up a bunch, the market interprets it as bullish, you know. Just as good as Twitch chat. Yeah, man. Again, Walmart, let's see if it holds. I'm watching the previous closing price. We're at 159.30s. And so 159.30s is the previous closing price on Walmart. We'll see if that actually holds. Tesla back over the VWAP, over 227s. Now the SPY is kind of like, this looks like a flag pattern here. And so to be honest, this looks like a flag pattern right here. You can see the little flag. I don't know if it's going to hold. I think one level that's confirming back and forth is 441.50s. 441.50s. Almost up to 160 on Walmart. And so 160 might hold. Again, now we're pretty flat on Walmart, which is good. I'm also in Google, but I'm flat on that one as well. Gold, we're sitting on gold. We're down on that one also, though. Disney, we're now technically green on that one on the day. And then Apple, we're also in that one. We're green on Apple on the day as well. Yeah, Walmart doing all right. Yeah, again, Casey, it's all good, man. Again, all I'm trying to say is just, if you're going to be here every day and talk, just have diversity of outlook. Like, don't say everything's bearish regardless of what the number is, you know? But again, not trying to argue. I'd love to end it there and not keep going back and forth about it. And, you know, kindly a request of that, please, sir. NVIDIA pop. Is NVIDIA going up? I'm still holding my SOXS trade. And it's been going against me, but we're already so green in it. I don't know where I got an SOXS. Let me see what I'm actually up in this one. So yeah, I'm still up really nice in this one. I don't know where I got in. I guess my average price on this trade was 830s. All right, well, we'll have to agree to disagree, Casey. It's all good, man. Again, really not trying to argue. It's all good, man. Walmart pulling back to the previous closing price at 159.30s. 159.30s. NVIDIA almost up to 140, but again, you can see the SOXS, which is like a microchip short ETF, right? So here's SOXS. This is basically going to go up if microchips are weak. We bought this one. Let me see. We bought this one at 830. Right now it's at almost 11. So we bought this one when NVIDIA was at like its top. So we bought this one all the way down here, which is a really nice entry. We got in almost at the bottom right here. So here's 830s. And so it's been a really nice run for this trade that we got in SOSX again at 830s. It's been pushing up a lot. The more subs, the more work for you. Yeah, for sure. Is it okay to only trade the Dow? I mean, it's okay to trade only whatever you want. I think a lot of people are going to have better results trading only one specific security or thing. I think that's probably the best way to do it. I think the only way to really do it is I think when you're first learning, you know, again, Bruce Lee famously said this quote, and I said this quote a long time ago, like years ago, and I see a lot of people using it in trading terms now, and it's true, right? Bruce Lee said famously, I don't fear the man that's practiced 1,000 different types of kicks. I fear the man that's practiced one type of kick 1,000 times. And that's very relevant for trading as well. You don't want to paint trading with too broad of a brush unless you're really experienced. If you're first learning to day trade, for instance, right? Like you don't want to have 1,000 different strategies that you're using. Again, that's spreading yourself too thin. It's not going to work. You want to get really good at one strategy or one symbol. And then once you master that symbol, if you're bringing in good, consistent income, then you could branch out and trade others. But in my opinion, it's much better to trade just one symbol. It's one of the reasons I don't like penny stocks is because penny stocks can, like a lot of the time in penny stocks, you're just desperate to find volatility. And so you tend to kind of reach with volatility and push. And it's something that like, you got to just learn to trade individual securities. I think like I like trading the Q and the SPY, the E-mini and the NASDAQ is what I like trading. But other people might like trading something else. Regardless, learn how to trade one thing first. If you can get good at that one thing, then branch out. But don't try to, you know, trade 1,000 different types of strategies. It's just not going to work. It's going to spread you too thin, in my opinion. But maybe I'm wrong. Maybe some people can get it right. I don't know. Wise traders once said you should be able to fit your plan on one side of a piece of paper. Yeah, maybe. What are your risk levels? What's your reward target? What's your sizing? What's your daily risk level? What's your max loss? You know, those are the different things you got to find. It's like 5 metrics. Figure out what those things are, and then you'll be okay. Ask your mom for more margin money. Hey. Ma, get the meatloaf, you know. I didn't much. Now I play with only Tesla in the queue. Some SPY. Hey, what's up, George? Only the bank is called Poppy Powell for more. Yeah, Powell speaks next week. Jackson Hole, big release. I shop Walmart, love it, but a lot of people hate it. Yeah. Yeah, some good content. Honestly, I'm out here making content, guys. I'm not trying to start fights with people. I'm just making content, man. Hey, if we can make content from it, I'm happy about it. So cheers to you guys. Hope you understand. You know, we got 600 people here to entertain, and so we do what we do. Again, the SPY's up to 441.50s. Again, we're in Walmart. Walmart's bouncing back up. It's almost up to 160s, which is great. And we're flat now on Walmart. So if it pushes up anymore, we're going to be green. Walmart killed it with earnings, man. They did amazing for earnings, dude. They did better than expected EPS, better than expected sales, better than expected fiscal year guidance for next year. So that's good. Hey, what's up, Nando's? Thank you, brother. Yeah, man, I appreciate it. Meatloaf. Yeah, if y'all have ever seen Wedding Crashers, I'm doing the Ma, get the meatloaf. Ma. Yeah. All right, guys, we got 30 minutes here. 30 minutes. Nvidia back up to 440s. Walmart up to 160s. We're now technically green on the trade. I'm going to sit in this SOXS trade because I think it's a hedge. Again, AMC, same thing, man. We're at 360s. We'll see if that one bounces. The Q, guys. Q finally had a couple, little dips, but it's still been on a really strong, pre-market session here on the Q. Gapping up. Let me see where the previous closing price is on this. I talk about the previous closing price so much. Again, on the Q, it's at 362.50s. And so we still got a ways. Walmart testing 160s now as well. Hey, what's up, Lewis? Yeah, hey, thank you guys so much. I appreciate it. Did my music stop? There we go. You guys red or green so far today? We're slightly green and stuff. Here's the day. Let's see if we get anything good. Walmart's still sideways. Again, Nvidia's still trying to run up. Look at Nvidia here on the left side. That's why I like watching. Always good trading info and content, never dry. Definitely top 3 morning channels. Hey, thank you so much. Top 3 entertainers besides Oprah and Springer. Yeah, rest in peace to the GOAT, Jerry Springer. Anybody that grew up in the 90s like me, watch Jerry. So rest in peace. Fairly green so far, so good. Hey, nice, man. I like it when you say money gets always cheaper. You mean money loses value over time? I mean, that's just a statistical truth, at least historically. Now, you never know the future. You never know if things are going to be the same, but it's very probable that they are. Again, and like you could look up the yearly inflation rate on average, right? Average yearly inflation. You'll see that that number shows up to be about 4% a year. Prices go up about 4% a year, right? And that's average historically from 1960 onward. And so, again, you'd have to look at a compounding calendar to see how much it's really going to go. All right, Walmart. Ooh, you love to see it. I'm going to take a little bit of profit here on it. I just locked in a little bit more. We just cut the rest. We're back down. We only have 25 shares left, so that you love to see it. We'll take it. Nice little green trade. We're still in it right now. But yeah, basically, it's going to increase 4% each year. And so without even including compounding, which is a much more exponential chart, just 4% every year in 30 years, that means 120% without compounding, which is, again, nothing. Like, this is nothing compared to what the compounding answer is going to be, because instead of that, right? So if the price increased 4% every year, instead of taking 4% of the base price, you're going to have to add 4 to it and then take 4% of that, and then add another 4 to it and then take 4% of that, and then add 4 to it and then take another 4% of that. And so the compounding of it is going to be much more profound over time in terms of dollars losing buying power. All right, so KC, I see you still trying to argue, man. Again, just a fair warning. Kind request, please stop trying to argue, man. And you know what I mean? Thank you, kind sir. Walmart up to 160.3s here. Nvidia prime to take off. Let's see. All right, Walmart dipped under the VWAP. Luckily, we took profit right around the top. Yeah, Nvidia could run. I mean, I think we posted something on one of our other pages about how AI could cause market to be saved. Like, if AI growth is exponential, like a lot of people think it is, AI is wildly influencing tech, wildly influencing everything right now. And I think it's only going to get more and more profound over time, the differences in production specifically. And so if that happens, then the market could keep ripping up this year, depending on what Nvidia earnings show. And Nvidia earnings are going to heavily weigh on the market, guys, heavily weigh on the market. Money buying power decays, yeah, for sure. It's also one of the things, like, again, you have to understand, like, the market's going to go up long term. I mean, it's not arguable, 99.9% chance the market goes up long term, unless like a black swan event happens. And in that regard, you got bigger problems than your investment struggling. Okay. Now, the thing to understand about is that all the major investment vehicles are just inflationary hedges to keep up with that money, right? So like we said, inflation hits 4% every year. What does the S&P 500 gives you? It gives you about, or what do bonds give you? Like a 30-year bond, they give you about 4%, you know. And so bonds are a way to keep up with inflation. If you want to beat inflation, the S&P 500 gives you 6 to 12%. Gold gives you, I don't know what the gold yearly percentage, but it's probably on par with the S&P 500 or NASDAQ in terms of increases. And so the real estate appreciates at about 5% yearly as well. And so these are all inflationary hedges. The sole reason that a lot of people use these things is to keep up with inflation. And so that, again, 100K is not going to be that much money in 30 years. And so the way you keep up with that is you take 100K now and you stick it in one of those inflationary hedges. And again, those are going to go up long term. Gold's going to increase. Real estate's going to appreciate. The S&P 500 is going to increase. And so these are all inflationary hedges whose use is to keep up with inflation. That's the point of these things. And with that in mind, like statistically, the market is going to go up long term. And when I say long term, I mean like 10, 20, 30 years, the market's going to be higher than where it is now. And that's just an objective truth. It's not arguable. Nothing's 100%. Again, a black swan event could happen. but like it's almost certain, everybody knows, economists understand this as well, that the market is going to increase over time for a lot of reasons, but one of the big ones is because inflation increases at 4%. And so, yeah. Get a band sound. Yeah, I used to get the Wizard of Stonks out when I banned somebody, where I made my head get really big and I put a wizard hat on me. I put a wizard overlay in the comment or in the chat, and I'd get really big and do it all that way. I was long in NQ above 15,000, but cut with losses yesterday after it closes. Yeah. Polestar, man, it's been a while since I looked at Polestar here, to be honest. I've seen a Polestar out in the wild before, so I've seen Polestars out there. I'm not in love with them, to be honest. I don't know enough about them to really say, but I will say it's going to be a struggle for a lot of these up and coming EV brands to succeed. If you're not Tesla, or maybe like Neo, or I think Rivian's got some chances too. But I think a lot of these small ones like Polestar, like Mullen, a lot of these are going to fail. I've talked about this for years, and you get people that are stuck because they've dropped such big percentages. Like Mullen is down like 99% over the last 6 months. And so, yeah, there's a lot of people that are stuck. And so that causes artificial bullishness on these stocks. But most of these are going to fail. I always said Mullen, best case scenario is that it gets bought out by one of the big boys. But even that's not super likely, in my opinion. All right, we're going to get ready to day trade, guys. We're going to be able to get ready to day trade. We'll see if we get anything good today. We got a nice little cushion on the day so far. And here's the E-mini right here as well. Yeah, I mean, Casey, like I said, man, you can comment, bro, but like if I'm like, hey, let's just drop it, it's too much arguing, like let's move on from it, and you're still sitting out there saying, oh, trying to argue about the same thing, it's just better to just, not. I don't want it to take up too much stream time. I mean, it's all entertainment, so I hope you guys are entertained. What I really thought about doing is that if I ban somebody, I could do the gladiator, let the chat vote on it, but that's how you know you got long-term watchers, top 3 of all time. Yeah, everybody knows the top 3. Yeah. I'm holding 11 calls for 2025 Polestar. Good luck, life. I hope you make some money. Yeah. The internet's fun, man. I mean, again, you just get people are weird. You learn like people are weird. I know for a fact that I've seen people here like act a certain way and then get banned or not banned, but they get kind of universally like disliked in the stream because everybody kind of sees it and they're just kind of like, be quiet, man. And then they switch to another account and they start talking on that one. And then, again, it just gets weird, man. People really want to like confirm their bias. A lot of them like want validation and like all this other stuff. Some of them are just insecure and like mad that I have a public forum or whatever it is. Either way, like we just try to roll with it and have fun with it. And again, it's all love here. Regardless of whether you're a troll or not, I appreciate everybody here. I really do. It's really fun to run this stream. And, I'd much rather do this than anything else. And so I appreciate you guys. Who's Jim Cramer, man? I don't even know who Jim Cramer is, man. He must be top 4. Polestar 5 is my dream car. I've seen one out there. I've also seen a Lucid. I actually like Lucids better than a lot of them. I've seen the Rivian truck as well. The Rivian truck's nice too. But like, there's a lot of stuff like in EV that are going to be a struggle. These up and coming brands are going to be hard to succeed because they simply don't have the production numbers. I think a lot of them IPO too soon, but I think a lot of them just didn't have the money to like get done. Yeah, so if you want to see the Wizard of Stonks, look, I did a bunch of different ones. I don't, is that the Wizard of Stonks? Let me see. I should go back and do this, honestly. This was a fun time, man. If y'all want to see what it looked like, here, look at this. Let me see if I can get this. Hold on. Look, this was back the push-up days. I was a hawk or an eagle on this one. I can't find the wizard one. I'll have to find it, but I was a hawk or an eagle. Here, you can also see interact with haters equals 10 push-ups, $2 donation equals 1 push-up. Push-up count is 630. And so I had to do 630 push-ups that day because I got a bunch of donations. But yeah, we also had like a leprechaun that we did. We had a wizard somewhere. I don't know where it is, but it was a fun time, man. Maybe I'll bring that overlay back. I think that overlay would be fun right now. How do you know they switch? I don't want to give out how I know, but I know a couple different ways if they're the same person or not. Tesla's owned 60% of the EV market and 4% of the total car market in the US, above Subaru and Volkswagen. Yeah. I mean, that's why Elon's one of the richest dudes in the world right now. The report was positive for economic growth. And so if the market's fearing a recession, the report's better than expected, meaning, again, so the report's better than expected, meaning more of the data showed economic strength versus weakness. Manufacturing came in positive versus a negative expectation. So like manufacturing strength was there. Improvement in manufacturing was there relative to an expected weakness in manufacturing for the report for the Philly Fed Index, which again did cause the market to pop up. For jobless claims, the number was pretty flat, but it came in under expected, which means that less people filed for unemployment initially in that period. So again, both of those, lower unemployment and higher manufacturing strength is a signal of economic strength. And if the market is fearing a recession, which I think there's going to be a lot of recession fears, especially if Fitch ends up coming out and downgrades the banks, I think that's something to consider too. There we go. Man, if I could give a job to get paid to do push-ups, we stopped doing the push-up thing. Honestly, I was too tired, bro. That's too taxing on me, dude. I would do push-ups, and like trolls would donate money just so I would have to do push-ups, and eventually it got out of hand. Like we started selling push-ups, and like before we knew it, one day we had to do 650 push-ups, and we sold them for like $1 a piece, $2 a piece sometimes. Capitalism thriving. And it worked, and we got a ton of donations for it. I saw a bunch of other people start to copy me after it though as well. Though I saw a bunch of other people start to copy that, and so like once other people start to copy me, I just kind of move on to something else. And so that's what we did. I also did mustard spoons for a little bit. Whatever can help engagement was fun. So. gas cars forever, I think. Well, I think big oil is more strong and powerful than a lot of people realize. And so I think there's a lot of propaganda that goes out there against EVs and other things, and people jump on board to that because, but big oil runs the world. Don't get it twisted. Like, it really does. Like, big oil runs the world. And so they certainly see EV as to a certain extent, a threat. Because if you have EV, you don't need to buy gas as much or buy oil as much. You're always going to need oil specifically for lubricants. But yeah, don't get it twisted. Big oil certainly doesn't like electric vehicles, and they are a powerful, body of companies and stuff. So yeah, Exxon up a little bit today. Speaking of Exxon. Coming from an EV owner, you hardly have to service these cars, man. Yeah, I mean, I might get one day. I don't know if I will or not. I might get one day. Not right now, though. Again, the SPY is still holding over that 441 level, and we did draw a lot of. Look at how close. So again, once you get good enough at support and resistance, you'll start to kind of see this. So again, if we expand this to the left here and we make this a little bit larger, look at how accurate my levels have been. So we drew these levels earlier in the day, like hours and hours ago. And like, look, we drew this top level. Look at how much confirmation this top level got. We drew this bottom level, 441, and we were watching this level when it was still holding these as resistance spots. We were still watching this 441 level back here when it was holding it as resistance, and this is where we initially drew that level out. And so again, technical wise, look, here's the confirmations of this resistance level. And so we drew 441, and we mentioned it many times as well. And now that we broke over it, you can kind of see what the S&P 500 is doing now, where it's holding as support. So again, once we break over or under a specific level, a lot of the time it turns into support, it turns into resistance, vice versa. So we're watching 441 specifically on the SPY, and we might play off of that level too if we get any good stuff. But we are bouncing there pretty consistently as well. And then again, you can kind of see the S&P 500 here on the left. Again, we're going to get ready to trade. We're already up a little bit. We got a cushion heading into the opening bell, and I'm trying to give it time for us to really start trading until the opening bell, though, because, again, here's 260s. Hey, what's up? What's up, Todd? How you doing, bro? Hope you're doing good, man. Polestar 5 is limited edition. How much does it cost, man? I don't even know what the pricing is there. It looks cool. What's the price? It's already at 100K. Oof, that's high, man. That's really high. I think it's going to be really hard to talk people into buying that over like a Tesla or something else, man. But if the Polestar 5 is going to be 100K minimum, that's a tough ask, I think. Seems like the buyers just woke up for a little nap. Yeah. I need a rally, stirred up the perma bear, different people who short emotions when I said we're heading for the moon. I hate to be wrong. Nobody likes to be wrong, but I think in trading, you got to be flexible. And again, like I said, you got to understand my bias, guys, which is like I hear so many people say short the market. And they said this a year ago. And it's like they just kind of universally say that. But the more time that goes on, the more like, again, the big edge long term is on the upside. And so if you find yourself betting against the market long term, you might want to stop, take a step back, and reevaluate what's causing you to have that. Because again, the big edge market wise is long term up movement, regardless of what anybody says. And it's not arguable, really. It's statistics is really what we're looking at. We're looking at the last 100 years. And again, because inflation rises over time, so does the market. You know, market trend's going to look like this over time. And you know, we might go like this in between, but generally we're going to keep going up like that, if that makes sense. So something to understand. Panic is a strong emotion, and we might get big pullbacks, big dips, big runs. But again, you zoom out more, long term, the market's going to go up. Watching Tesla up a little bit as well. SPY's been holding this trend, man. You know, I keep telling myself the trend is too extended, so I don't really buy anything yet. And I think it's probably like the more we test the support and resistance level, the less I trust it. So I think I gotta just genuinely just chill and just wait and try to get my real good day trading comes after the open anyway. And so I don't want to push too hard and cause myself to be down big at the open and trying to win back some losses here. I'd rather just sit back and wait and let the opening bell happen in 6 minutes. We'll see what that looks like. All right, so NVIDIA up to 439.50. So NVIDIA starting to rise. The question is, does this improve the NASDAQ and other in the SPY here? Because they're both heavily weighted in those. Porsche's 100K too. Yeah. But Porsches are already established as a company, right? Like I think the big fear most people have is they don't want to be another Clark Griswold getting some no-name brand car and having it break down on them. Like nobody wants to be that. And I think the problem with a lot of these cars is that they're so new, you don't have the support system in place to really give buyers confidence in them. Like you don't know whether they're still going to be around in 5 or 10 years. So if you need them, you know, you're not going to know if they're still going to be around, if people even know how to work on them. And I think that's different relative to something like, you know, Toyota or Honda or Ford or GM or whatever it is. Like, you know, people are going to work on them. You know, they're going to be around in 5 to 10 years. And with a lot of these up and coming EV brands, you just don't know that. You know, you just don't know that. You might buy one of them and then the company goes out of business. You know, maybe the car might appreciate if that's the case because there's a limited amount of them. And so supply and demand, but still. Rich people like to buy expensive cars sometimes. Sometimes they lease as well. Again, I know some wealthy people. A lot of them lease, not all of them. Some of them buy, but the reason they lease is so they can every year switch it out to get the newest model, right? So like if you want a Benz, you know, and you want the newest model of a Benz, right? You lease it for a year. You drive the 2023 model for a year. You spend like what, 20K, whatever it is, 30K, whatever it is. After that year, you return it and you get the 2024 model and you lease that for a year and you drive the 2024 model. And then after that year, you bring that back and you lease the 2025 model. And that way you always have the newest one. Instead of having to buy a car and trade it in and sell it every year, you just lease it for a year. Cars are depreciating assets anyway. And so it's not like buying them and holding on to that asset is some like financial building thing. A lot of the times it's worse to buy them, and sometimes if the cars depreciate the dealership will actually buy them back from you anyway. So a lot of the wealthy people I know actually lease over purchase cars, and that's a misconception I think a lot of people have. Yeah, maybe Todd. We'll see, bro. 440, 50 SPY resistance. Yeah, I'm gonna wait till the open for sure. We got 2 minutes, guys, until the opening bell. I'm just gonna wait and see what we get then. We'll see if we hold it. Oh man, look at Walmart, guys. Wow. Walmart popping up even more. Took a little piece off again. Still holding some though. Opening bell's in about a minute and a half. I thought electric cars were a joke at first. I was wrong. Yeah, a lot of people thought EV was a joke. I had a lot of people that were here that called EV a joke like 8 months ago. And now stocks EV has just grown crazy big over the last 8 months. And so people typically fear things they don't understand, and that or they feel change, or they fear change. And so a lot of people were skeptical of EV, and again, I'm wrong about a lot of stuff too. I'm not saying I'm always right. I'm definitely top 3 most right ever, but yeah, AI has grown crazy big over the last year, and I think it's only going to get I think it's only going to grow faster and faster. All right, guys, here's the opening bell. Again, SPY holding that bottom trend line still. Yeah, Dave Ramsey, I mean, I think I could probably understand, like, most millionaires don't want to be a target, like they don't want flashy cars and flashy shoes because they don't want to be a target. People tend to target them if they think they're rich, and so they don't want that. If you have enough money, you don't want that, and you want to stay hidden. And so that's probably why most of them drive F-150s. There's the opening bell, guys. All right, so there's the opening bell. We can see the E-mini and the SPY trying to push. Again, NVIDIA just ripped up over highs. The SPY bouncing back. My Disney trade is nicely in the green too. Walmart is moving up. All right, so a lot of stuff's bouncing up. The SPY's bouncing up. NVIDIA shot up for a second. And now it pulled back a little bit. Walmart, we took some more off at like 160 something. Starting to dip now though, but again, we're up enough on it that we're okay regardless. SPY's still moving. NVIDIA's starting to turn though, and this might turn the rest of the market with us too, guys. So again, this could turn the rest of the market. Exxon moving up too. Yeah, I know, Lacey, if he's not answering, just let it go. There's no reason to just fill the chat with arguments. It's all good. I understand you want answers for that. But again, if you're not getting an answer, just let it go. No reason to just say the same thing over and over again. Google? Yeah, Google's up. SPY's still in that trend, but look at NVIDIA fall. So look at Nvidia dip here, guys. That's a big drop. Look at Nvidia with a huge fall down. I'm going to short this because Nvidia looks weak. Here's the breakdown. We already got a $300 cushion on the day, so I don't want to hold this too long. I'll let it work, but we're down $75, $60. The trend looks weak on the SPY, but you never know, man. We're still in the first couple minutes. I'm just going to get out and wait now. We're still up hundreds on the day. And that's a really choppy opening group of candles at about 3 candles. Yeah, it's all good. Bank of America. What are banks doing today? Yeah, Bank of America, Wells Fargo, both green. Nvidia's dumping down. Well, yeah, Nvidia dropped originally at the opening bell. Again, this is very choppy opening market session here, though, guys. Look how choppy this is. Wells Fargo popping up. Very choppy trend here. We'll wait for this trend to break and see if we get something. Yeah, Apple up a little bit on the day, but all right, so Apple's still moving up a little bit. Everything else is kind of bouncing back too, but look how sideways this range is. That's the range right now here, guys. We'll see if we break on the bottom or up side. Either one could happen, and again, we're pretty flat and neutral. Hey, thank you, Luke. Wonder when Tesla's going to reverse? Yeah, I don't know, man. Tesla's so volatile. Who knows? Walmart's starting to rebound back up. We're consolidating right at that low level here. Watch Nvidia. I'm going to go ahead and short this, I guess. The trend looks weak, and we're under 441. And so I'd love to see if we reject here or hold. We're already up hundreds on the day still, but if we pop right back above it, we'll just kind of bow out of it. I want to give it time to reject here. There we go. All right, we took half off there to protect it, locked in a little bit of profit, and now we can let the rest work here. What a potential breakdown. I'd love to see if the breakdown works. There we go. Luckily, we took that little piece off, and we're still flat on the trade, but we're watching 441 really, really closely here. Walmart all the way back up. Very choppy open, guys. We're watching 441 close. Part of me wants to almost add to this again since 441 has been like such a strong resistance level. I'll go ahead and add one here. There we go. All right, we just took off another part of it just to protect the trade. 441 again is that level we talked about all morning here. I'd love to give it time to really rebound. You can see the S&P right there and watch the trend, but watch the NVIDIA chart as well. There we go. There's the break. We finally caught it. We were patient with it. Let's see if it actually holds down here. It's a big break. There we go. I'm going to go ahead and cut that. All right, so we're up about 3 on the day, 300. Slight downtrend on the market. NVIDIA is starting to catch back up, though. So, again, that's why we wanted out of it. Yeah, Tesla's the one that's really weak right now. It's probably a bad short position. I don't think this one's necessarily good. See if we can add a couple contracts to it or fix it, but I'm actually regretting this one. We're right at lows, though. I mean, and maybe I'm wrong. There we go. Green on the trade, but hey. All right, so we just cut it. All right. Well, yeah, man, I guess it worked out. Tesla cracking lows again. Yeah, I mean, I understand the dynamic with less people filing for unemployment, more people working, more spending equals higher prices. I understand that. But it depends on what the market is fearing. The market's not always universally fearing inflation. A lot of the time, the market is fearing a recession. And with Fitch coming out saying they might downgrade some of the banks, and with a rate hike last month, I think that's a justifiable fear for a lot of these sectors as well, is recession fears. And again, if y'all haven't checked out Top Step, again, check out Chart Prime. First of all, I use Chart Prime a lot with Top Step. Chart Prime is a trading view indicator service. And again, you can use it in stocks, crypto, Forex, futures, just really, really useful in those markets. Again, I can't guarantee you're going to make money, but it's a trading view indicator service, right? So my favorite 3 indicators right here are the Market Oracle, the Market Oracle Pro, and the Market Dynamics. Again, you can kind of see the trend breaks and what this means. Here's the Market Oracle Pro. And so you can see the symmetrical triangle and what that breaks. It also shows you trend breaks really easily. So like look at when this breaks here and look at the breakdown you get from it. But the Market Oracle Pro is a little bit shorter term. So it's trying to help you shorter term, right? So it'll give you these signals that look like this. And so sell signal here, drop. Buy signal here, nice bounce. Sell signal here, nice drops. This one might have been wrong, but this sell signal here worked great. Look at the big breakdown from it. Again, buy signal all the way down here, beautiful bounce back up. And so the Market Oracle Pro is a little bit shorter term. You could also use the regular Market Oracle. So if we put on a 5-minute chart, You can see the regular market Oracle. This one gives you more reversal signals. And again, you can kind of see the trend break and where it shows you. But again, just let me get rid of the Pro so you can see it. And you can use the Pro on any time frame. But like, look at how accurate the regular market Oracle is. It gives you less signals, but like, look at that. Look at how accurate this signal was. Reversal down signal here. Again, I've showed you guys this edge before. When you get a reversal and a bearish engulfing candle showing up together, you get really nice confirmation in the move. And again, this is a company called Chart Prime. It's $35-40 a month. Again, look at this yesterday, confirming the same thing. Again, what did I say? You get a reversal signal and a bearish engulfing candle. Look at the huge breakdowns. And this is over hours and hours of movement. Reversal up, bounce. Reversal up, bounce. And so again, there's tons of different stuff. This is just a small piece of what they offer. They recently did an update where they show you different trend breaks and different stuff like that. Really useful, guys. Really useful. You can kind of see all the different stuff they give you, man. And it shows you chart patterns. You can use them on any time frame, long-term, short-term time frame. And for $40 a month, I think it's very obvious that like how useful it is. Again, it's called Chart Prime. Trading View Indicator Service. Market's bouncing back up a little bit. They are a sponsor of mine, and so I'm definitely biased in their favor. But again, pretty useful, guys. And if you want to check it out, you want to, again, I'm not saying you should base your trades solely off of this. I know some traders do. But the edge it gives you universally, I think is pretty cool. And if you want to check it out, again, I am biased, but check out the link right there. Market's starting to bounce back a little bit now, too. Look at the E-mini pop. And so very choppy open. We got a little bit of a breakdown, and we're green on the day, but very choppy action so far today, guys. Not a lot of great movement, I would say. Very flat day. Y'all be careful pushing too heavy right now. Top Step's not putting people on wait lists anymore, Kaylee. You can now buy them now. So again, if you want to check out Top Step, you can. They did open up purchases on Top Step, so you can now buy a Top Step combine and start it. And from what I've heard, they've gotten it really nicely set up here, where you get your credentials fast. If you don't know what Top Step is, it's a funded program for futures. They are a sponsor of mine as well. Great way to learn day trading without too much risk. Again, they give you a demo, they test your skill. Just taking the challenge builds your skill, but if you're good enough to pass it, they'll fund you between 50K to 150K. And it's the gold standard. They've been around for over a decade. And again, you see me watching the SPY and NVIDIA, and the movement's very similar. So you can day trade the S&P or basically the SPY and futures as well. But again, there's a breakdown here. This looks weak. Walmart's still surging up, though, which is nice. All right, look, there's weakness. I don't usually take low of the day shorts, but I'll try it here and then maybe add to it if we get a little bounce to fix my average. It will be a little scalp if we can get it, though. I'm going to go ahead and cut that. I see it potentially retracing back up. But yeah, we're up nicely on the day here. What's the E-mini exactly? The E-mini. The E-mini is a futures contract. If you don't know what futures are, guys, futures, I've said this story before, but futures were originally created, a long time ago. And the reason they call them futures is because they were a way for farmers to lock in their yields, to lock in their crop yields. So basically farmers were growing crops, but the prices had fluctuated by the time it came to yield those crops, that it wasn't as profitable as they wanted to be. And so what they started doing was selling contracts, locking in the future price of a commodity to speculative investors. And they called these contracts futures because they were betting on the future price of commodities. But the futures market has grown to where now you can day trade the S&P 500. It's called the E-mini. So the E-mini is the S&P 500 futures contract. If you look at, again, here's the E-mini on the right or on the left. If you look at the actual S&P 500, again, the price is very similar, very slimmer with only slight differences. So again, look at the pattern here. drop, bounce, drop, drop, bounce, drop. You know, same thing with the SPY. Here's the SPY. Same concept, same price action. Again, you'll see it's the same thing. Drop, bounce, drop, drop, bounce, drop. So it's the same thing, but you can day trade this left side here with no PDT rule. You can day trade short, no PDT rule in futures. And that's the big edge that futures gives you that a lot of people don't realize. Yeah, I don't really mess with 0 DTE options. There's just too much risk that comes with that, in my opinion. Yeah, Tesla is really what's weak today. We're down a little bit too much for me to short this too, though, so I'll wait. Walmart's still starting to pop up. Walmart's been doing okay. It's been leading the market a little bit more. Tesla's starting to bounce back up some too. Target's nicely green as well. It's back up to 131s. Shout out to Target. Walmart moving up as well. I wonder if I'm sure Walmart is influencing Target on the positive side though. Target's all the way back up to almost 131.50s too. Did AMC go green, man? I hope it did, bro. I'm in AMC still. I added a little bit more size to it the other day too. Good. Yeah, I don't know what I want to do with it, but we added a little bit more size to it. Yeah, so contracts expire every quarter. So what you see me trading on like Top Step, for instance, is futures. Those contracts, they roll over. They call it a rollover. That rollover happens quarterly. And so every quarter it rolls over. And yeah, that's kind of what happens. You got to update. The latest one is ESU3. It's the E-mini U3. Hey, what's up, Tiny? Good morning. Google and NVIDIA trying. Yeah, Target's running. Walmart's still up at the top range. Google's up there too. NVIDIA's starting to bounce back. It's up to 438.20s or so. So it's trying to bounce back too. All right, so got a little pop up here. I do see some stuff reversing, so I'll try to short this, but I also think there's risks in it. We've got a cushion, and so we can try to scalp some more, but there we go. All right, so just made about 75 bucks. Again, here's our graph on the day so far in day trading futures. We're up about 375 or so on the day. Let me see how much we actually need to get funded here. Okay, we still need a good bit, but SOXS just still green on the day now. Disney we're green on the day now too. CVS is dropping big. Yeah, I think they had a deal where Blue Cross removed them from their like primary pharmacy or something like that for CVS. I saw that news this morning. Again, so we're testing these bottom range levels. And yeah, the FOMC minute stream was fun last night, man. The FOMC minute stream, you know, the market didn't react. We had like thousands of people, like 2,000 or 3,000 people here. Total stream got like 15K views or something. And it's fun because the FOMC minutes report, like what we did with the report is we used AI to interpret it fast. You know, so we basically copy and pasted it into Chat GPT, and we said, Chat GPT, give me a summary of this report in 300 words or less. And then we read that report. We did it with we took a third of it, got a 300-word report on a third of it. And this is a 12-page document. And so that's, if you want to know the use case argument for AI, that's one of them, is that it can interpret data very quickly, very fast. Hey, what's up, Joel? There's always a lot of differing opinions about those streams. Yeah, those streams are fun for sure. Hey, thanks, Tiny. So we are starting to get about CVS dumping down here. The market's starting to fall too. Why is Apple dumping? Is it fast? Oh yeah, Apple is dumping down. Yeah, I don't know. But that's causing the market to fall. Getting some fast drops here. Luckily, we weren't short in, or we weren't long in anything. But man, we are starting to get some dumps. Yeah, we can have VWAP on the chart here. Give me a second. I'm kind of watching everything going on right now with the S&P. It's down so much. We would probably short it. We made most of our money shorting today, basically a trend. Yeah, Apple with a huge dip. Apple's been up so much already, though, this year. Target's trade's doing really nice, too. Trying to get breakdowns together. We're down a little bit too much for me to want to short this yet. We get a little pop. I'll short into this pop and then maybe take a couple contracts and take a swing on the day with my trades. Again, we're up about $400 already, and so we can use this to take a swing. There's 3 contracts. I'm not going to take more than that, and this will be it. And if we lose here, we'll be back to break even. All right, we got the pop. We got to give it time, though. We're still green on the day, technically, even being down this much on the trade. And so we took a swing on the short, and this just did not turn out well. We'll leave this level as our risk. This will be our risk level if you want to see where it is in the trade. Although we are getting a turnaround here. All right, we'll take 4. And again, we got funded earlier a couple weeks ago. We're trying to get funded on our second one. Because to swing on a funded account, I really want 2 funded ones to kind of diversify and be safe. All right, so let's see if we dip now. This looks bearish, but anything could happen. There we go. We're back to break even here. If I can get back to break even, I'll probably scale out of some of this trade. Could be worse. I'm going to take out half right there. I just don't like it. I'm okay with losing a couple $100 there and limiting my risk. Still very green on the day, up hundreds. Even more than that now with being green on the rest of this position. And again, this is something where it's like, if I don't like the trade and it's gone against me too much, I will limit my risk there and take the green day. Even though if it would have worked, I think it would have. But it's too much risk there, I think, for me personally, honestly. Maybe we'll add it back if we need to. All right, 3 contracts now. The goal is to keep it where I'm somewhat break even if I lose on this trade, to put it into perspective. That way I've got like a lot of room. And if it goes in my favor one of these times, then we'll be pretty close to funding. Big retracement there. All right. Flat on the trade right now or so. And again, I want to give it time. In order to get funded, you got to take risks. If you try to baby it too much, you're never going to get there. And so it makes more sense to just open up multiple funded ones and then take swings in each. My stock portfolio is doing better today too. Still consolidating close to break even, but we are thinking about cutting it now because we're about flat on the day now. If we lose, if we get out here, we're flat. Yeah, it's just too much. We're going to get out there pretty flat on the day. And so we got out there with a very small loss. And again, it's just too much risk to take, I think. Especially with it pushing up. So I think we limited our loss there pretty good relative to what it could have been. And we'll see if we get some good price action now. But we are getting some bounce backs in market. But the overall trend has been red, guys. Stocks are doing really well. What is this caused by? There we go. We're shorting the NASDAQ right now, too. recovered a piece of that. We got a little bit back there. All right, later, Stefan. Have a good day. Yeah, I'm probably going to close it down, guys. I don't see too much action here. I'm going to go ahead and get out of here, guys. So y'all be safe. Y'all be good. I'll see you guys a little bit later. Not really any other big stuff dropping this week, so it's probably going to be a slower rest of the week, which is okay. We're almost to 113,000 subs. And again, we've had really fun growth lately. FOMC report, we got over 16,000 views yesterday. The last FOMC meeting, we got over 30K views. Our views have been shooting up really actively lately, and so it's been a really fun time for the channel over the last couple years, and we're going to try to keep the growth up. Y'all be safe though. I love you all. If you want to check out Top Step, a great way to help support the channel, check out Top Step. It's a funded program, so if you want to day trade with less upfront money, like if you want to day trade with less needed equity, try out Top Step. It's a funded program for futures. There's no PDT in futures. You can day trade short in the futures market, no PDT restrictions, and Top Step's the most legit funded program in the world. Check that out. Check out Chart Prime. I'll see you guys later. Love you all. Y'all be safe, and we'll be back tomorrow. Later, guys.